pause everyone
sorry.
here. No, we are about a minute or so. Samriddhi, will you give us a heads up before we go live on screens? We can't hear you. We can't hear you. We can't hear you.
Yeah, I was saying, so basically we're going to start in the next 2 minutes.
Sure.
And so from 10 to 11, we have our session. I'll introduce the program, introduce all of you, hand it over to Bijoy. So he'll take the session forward from there. We'll have a presentation in between. And then after all of you are done, I'm going to request Mr. P. Satish to very briefly thank you all and, basically, just come in to wrap up. And then after that, we'll take a 15-minute break, but that 15 minutes is basically like for just a tech check for the next session, right? So, and that's about it, simple. And just at all times, you can, when you're not talking, maybe if you can mute yourself so that, we don't have an audio disturbance. That's all. Everything else is simple.
Sure. Thanks, Samriddhi. I think we are about a minute to go. So
sure.
We all will mute ourselves.
Okay, so good morning, everyone, and a very, very warm welcome to the Sa-Dhan National Conference 2021. It is day 2 of our today's program. We had a physical event yesterday at the Lee Meredith, and today we'll be going all virtual. The theme for this year's conference, 2021 National Conference Sa-Dhan, is revitalizing financial inclusion. Now, to start with, our first session, in fact, we'll be elaborating on liquidity stress, trials and tribulations. And joining us for this session, we have with us, first of all, Mr. T. Bijoy. He is the Deputy Editor with Informist Media Private Limited. And we have a lead presentation by Mr. Deepak Alok, Partner, Prime M2I Consulting Private Limited. And as our panelists, we have with us Ms. S. Vijay Lakshmi once again. She's a CGM MCID at NABARD. Mr. Arup Kumar, who is CGM SIDBI. Mr. Vineet Rai, founder and chairman of Avishkar Group, is also joining us this morning. Mr. Swapnil Neeraj is the principal of IFC. And Mr. Vivekanand Salimat is the chairman of IDF Financial Services Private Limited. And we have an hour's session for our audiences who have joined us now. You can put in your questions in the chat box if you have any questions, and we can ensure if we have that time, our panelists can address your questions. All you have to do is just go to the chat box and just put your questions in there. And without any ado, I am going to hand it over to Mr. Bijoy to take the session forward from here. Thank you.
Sure. Thanks, Samriddhi, for the quick introduction. I'm going to do the exact same thing because we have a great panel ahead. And in the interest of time and to make sure they get heard, I'm just going to call Deepak to come up and do his presentation. Deepak also happened to join us for the panel meet, so we have been able to distill all of our ideas together so that the overall session gets better. Deepak, over to you.
Thanks, Bijoy. I'm sharing my screen. So can you see my screen?
Yes.
Yep. So this session is about the liquidity risk which the MFIs have been facing of late. So while the liquidity risk has been brought to attention during this COVID crisis, and the MFIs have received significant support from the government and the regulators, from our past experience, we have seen that the liquidity risk for the MFIs becomes acute whenever there is a crisis. This could be a crisis facing the microfinance sector, like AP crisis, or something to do with a broader financial sector like ILFS default, a national event like demonetization, or a global event like the COVID-19 which we are facing now. MFIs have faced liquidity issues during all such events. I'm sure COVID-19 is not the last, and probably this is also not the worst. Now, let's talk a few things about the nature of liquidity risk in the MFIs. The nature of liquidity risk in the MFIs is such that it becomes acute at a very short notice, catching MFIs unawares. So last week everything was fine. Today we are in a mess. Now, experience also suggests that credit risk, operational risk, market risk, all of them can give right to liquidity risk, even the reputational risk and the legal risk. So all those risks can give right to liquidity risk ultimately and quickly. Another important thing to note is that the liquidity risk does not show when things are going good. This makes developing early warning signals difficult with respect to the liquidity risk. The shorter repayment cycles on the loans and the lack of access to long-term funds further adds to the special situation in which the MFIs are in. A few of the organizations have been able to face liquidity situations better than the others, those enjoying the confidence of the investors and the lenders, those who have been perceived to be transparent with respect to their operations and with respect to the data and the numbers which they report, and those having a conservative approach towards liquidity. So they have been able to manage liquidity situation better than the others. This is what the experience suggests. Now, I would request this esteemed panel, to take a slightly longer term view of how the liquidity situation can be handled by the microfinance and MFI as an institution and microfinance sector as a whole, and dwell some of the few important questions. The first question is, do the MFIs underestimate liquidity risk and do not devote as much attention and resources which they devote to, say, credit risk or operational risk, and take more risk than their risk appetite? The next question would be, are the liquidity risk management tools such as liquidity contingency planning and liquidity stress testing relevant in the context in which the MFIs operate? How effective have been the current support extended by the government? And finally, do we need some alternative institutional funding mechanisms to support the MFIs in such time? So this is all from me, Bijoy. So now you can take over from
Thank
here.
you. I think that that sets us up perfectly for the session that we're getting into. It completely puts into perspective the short-term problems that eventually become long-term problems. So thank you, Deepak, for doing that for us. Let me just start with my first question, and this goes out to all the panelists. COVID-19 pandemic posed a unique set of challenges for the microfinance sector. And even as the institutions were struggling, their borrowers were also struggling at the same point. With the benefit of hindsight as practitioners and industry experts, what were your experiences across the first and the second wave of the pandemic? Just the first broad question, so we all kind of come into the conversation. I'm going to start with Vivek sir first, then we go to Vineet, then Vijay Lakshmi and Arup sir, and I think Swapnil can give us the big picture approach after that.
Good morning, Vijay, and good morning all the panelists and the participants. First of all, this pandemic first phase caught everybody unaware, and first instinct of most of the organization was to survive. So survival means to pay salaries of the staff. Suddenly, every economic activity came to a standstill, and most of us started doing business continuity planning. With the current liquidity, how long we can pay the salary, preserving cash so that we survive. So that was the first thing to happen. Most of us did that, and very fortunately, RBI came out with a moratorium plan, and suddenly the lenders extended moratorium. So that gave a relief, and we were asked to give relief to the borrowers also. So we were able to tide over the immediate crisis. And then the liquidity support also came from financial institution, especially SIDBI. This liquidity helped us not only to manage the operations, but also to meet the repayment obligations. That was the first one. For almost 1 year, the disbursements almost near to nil, and we're only recovering, and depending upon the situation of pandemic, certain states the recovery was good, and certain state it was not good. The worst affected was Maharashtra. I operate from Karnataka. Karnataka was relatively better. And the second phase, the first phase was mostly urban centric. Most of the metropolitan places and larger urban centers were affected. But in the second phase, it spread to the rural area. So it became pan-India. So in the pan-India, again, the moratorium, etc., were extended. But this time, unlike blanket moratorium, it was case-to-case basis. So this was an issue. And one of the issues that affected this was the provisioning norm of 10%. So relief extended to the borrowers was limited to the ability of the MFI to make a provision. So therefore, the relief, though intended that should be extended to all the affected people. So this was one of the constraints that had happened. And in terms of liquidity front, the public sector banks became proactive because of the guarantee support given by the Government of India. So the public sector banks, SIDBI and NABARD, etc., came out with the funding plan. So as of now, there is absolutely no issue related to liquidity. So money is available, but the offtake of loan was very, very less, mostly because of the relief measure government gave, free ration and MNR IGP as a result. So the demand for credit was very less. And then these kinds of borrowers mostly spend for their school children and then festival. And since there was no schools and no festivals celebration, the credit was very, very slow to take off. So now we can say it has come really to normalcy. The monthly credit offtake is matching pre-pandemic days. But then whatever loss that has happened, whatever the shortfall that has happened is yet to be made up. So in this case, I, on behalf of all the microfinance organization, appreciative of the efforts the Government of India, Reserve Bank of India, and development bankers like SIDBI and NABARD took very proactive measures. But having appreciated, there are also certain concerns and difficulties. Now, though there is a liquidity, the quality of assets is now going to fall, because once the moratorium is over, this quality is going to fall. So how do you manage this loss? So this is something which the industry has to grapple with. One relief that is this 10% provisioning for restructured asset can be lowered, or some alternative mechanism has to be provided. This is one issue. The second is whatever guarantee support that has been given, which has been passed on to the organization, there are certain issues like turnaround time. So disbursement is, there is a gap between promise and the delivery. This is something which has to be monitored and done away with. And we can also look at certain other products like providing these organizations subordinate debts, because this the moment they give loan, these are to be matched by book debts. So now, in order to manage the finance as well as to loan loss, what is needed is a capital support. So this can be provided by subordinate debts. And one more innovative thing also can be done, like all the microfinance organizations are going to suffer to a small extent because of this pandemic. So government also can think of like first loan loss guarantee. Let's say the first 2.5% to 4% the government can take over. Remaining can be absorbed by that. So what will happen is it will not only make the organization to survive, but go with a full force and bullish, so that whatever aggressive mode of the government and the society in order to bring the economy to upstart can happen if this relief is given to the organization. So these are the things I share from the perspective of practitioners.
Thank you, Vivek, sir. I will circle back to that later in the conversation, the last bit that you were speaking of. Sorry to cut in at that point. But just to get everybody's early thoughts in, Vineet, sir, next.
Sure.
Vijay, thank you. Unfortunately, the Queen has yet not granted me the Sir tag, so you can call me Vineet. But coming back to the issue, I think pandemic, Deepak actually made a very scary comment saying this may not be the biggest event. Deepak, let me tell you, in last 100 years, probably last 1,000 years, never have in the past, the world has come to standstill. So COVID probably is a one-off, one in a million event. And I hope and pray we don't see a similar event ever again. Having said that, I do understand the world has become very dynamic and very challenged. And so we might see something like this. And I think when we are discussing COVID, we might have to take this on account that it is a one in a lifetime event. Most of us probably will never see it. I think the last time the world faced a similar event was probably World War II. And that was quite some time back. So we need to keep that in mind. And that context is very important. And within that context, I think the government's response, I don't think so I have ever heard Governor of RBI mentioning microfinance in the first 3 lines of his statement on every 15-day or 30-day basis. So the recognition of microfinance from the government side looks like to at least the acknowledgement of the role of microfinance and its relationship with the low-income population is fairly well understood at the regulators level. The moratorium, there are 2 different views on moratorium. Was it good? Well, probably given the circumstances and the suddenness of the onset of COVID, it was good. But if you ask a lot of people, specifically with the kind of microfinance short-term loans that we give, 6 months is a very long time. And when people's earning erode, it's very difficult to get them back. So the 10%, and I think Mr. Vivekanand actually very eloquently talked about the 10% and the consequence of that 10%. In my view, the choice of the instrument that the government used was, I found it quite interesting, the TLTROs, because it favors the large organization, those probably who didn't need the capital, but were very happy to take away as much capital given the uncertainties. So it was a great move, great thing to bring that capital instrument out, but consequently favored the large and not the small. Unfortunately, microfinance institutions are also, there are a large number of small microfinance institutions, but funnily, even the largest microfinance institution was struggling to get access to TLTRO. So while the idea and the recognition was great, the instrument used probably did not match the aspirations that the regulator themselves had. Which was acknowledged by the regulator and the change brought about. I think that the second wave has been far more debilitating in my view than the first one to microfinance institution. And the numbers, anybody who looks at the numbers from April to June could actually see that those numbers are really startling. And I think finally, I'll just sum up with this one final statement in my view. The time has come for financial regulators and banks to really ask themselves if they see microfinance as a financial inclusion tool or they see it as a pure lending mechanism. More so when the regulator exhorts us to think about the social objectives of microfinance. And unless we can understand the two. So is there a decimation of jobs at the lower end? Is there a decimation of livelihood at the lower quartile of the population that microfinance deal with? Do we agree to this or not? It's a very obvious answer. There is a fairly significant decimation. Is there more need of microfinance now or less? The answer is also very simple. There is more need for microfinance. So if the prudential norms are working against making microfinance institution active, is this time to really rethink and relook at them? Or is it fine to apply the same yardstick that is being applied to those who are doing very, very large loans or those who actually have a very diversified portfolio to a microfinance institution, which has been by regulation forced to only target. So 85% of the money has to go only to one sector. I think there is a real introspection needed right at the top. And I'll stop here.
Thank you, Vineet sir. You raised as many questions as you have answered. Vijay Lakshmi ma'am and Arup sir, I would ask you to take us through the kind of support your organizations have provided during this phase, during the first and the second wave. Vijay Lakshmi ma'am first and then Arup sir. Ma'am, you're muted.
Thank you, Vijay. Good morning, everybody. As Deepak very nicely put, when the first wave broke out, there was no time to react for anybody. March 22nd, the lockdown was announced, and immediately, the kind of freezing which happened to all activities, And as Vineet Rai ji said, I think it has been a one-time affair which happened. Now, as early as April, RBI gave us the special liquidity facility. And that was for including cooperative banks, regional rural banks, as well as the NBFC MFIs. It was for 25,000 crores. We had disbursed that completely. 2,000 crores went to the MFI, NBFC MFIs. And here, if you see, actually, when we look at the disbursement, we had made 17 disbursements, and this covered 10 very large MFIs and 7 large MFIs. So, as was said earlier, the money went to the large MFIs. Then subsequently in August, in the meantime, we realized we made an assessment, and then we wrote to RBI seeking additional liquidity, special liquidity facility. And when we wrote to RBI, when we were discussing with RBI, we also took the data out as to how many would be actually eligible, because asking for funds is one thing, but disbursing is another. So then we found that most of them would not, fit into the criteria for disbursement. So we made a number of relaxations. I think that relaxation we will talk a little later, because when that question comes up, large MFIs versus small MFIs. So we did relax a lot of conditions. And in this ASLF, if you see, we had disbursed 1,591 crores, out of which, 7 very large and 8 large were supported. So that makes it 15, and 9 small MFIs, that is with 100 to 500 crores of capital, and very small 2 was only for 4 crores. So the support did go into them. And when we did this, along with that, 1,208 crores of normal refinance went to the MFIs. That obviously would have gone mostly to the larger MFIs. Then here we had made this amount of 159 was given over 26 disbursements. And subsequently this year, in April 21, after the devastating second wave, we again received 25,000 crores, and out of which 625 crores has been disbursed. Here again, what happens? Primarily, it has gone to the very large and large MFIs. So the issue is the total number of entities, the total amount which has gone into the sector is 4,216 crores, which is only the liquidity facility amount. Our refinance is separate. And here the number of entities which were supported were 33, out of which 11 are small. Okay. And 11 very large and 11 large MFIs. So now this is where we stand. What I would do is I would come back to you. There are more details. Would you like me to?
No, I'll come back to you on this question specifically. I want a specific question on critiques of how these models were done.
Okay.
So to Arup sir and you, I will come back to you with that.
Okay.
Question.
Thank you so much.
Thank you, Vijay.
Thank you.
Arup sir, if you could come in about how your institution dealt with it and how you all handled your funding that was available at your level.
Thank you very much, and very good morning to all of you. We all know, we have seen this once in lifetime, once in century, once in 1,000 years, but it was that bad really. Thankfully, we are coming out of it. So the most reassuring thing to watch what happened was the thoughtful, understanding nature of regulator and government of India. They immediately started with, apart from lockdown, if we talk about first wave and second wave, first wave affected the livelihood. Second wave, since it adversely affected the hinterland also, so life and livelihood both were affected. So in first wave, RBI came out with moratorium to take care of that, basically gives succor to the industry, the enterprises, so that they are not saddled with this additional responsibility while grappling with this crisis of paying the loan back or repayment and interest. But at the same time, to take care of the financial intermediaries, the financial service providers, banks, NBFC, MFIs. In a very thoughtful move, RBI talked about TLTR, LTRO, TLTRO, special lines. So while the TLTRO, LTRO, very rightly, everybody is talking about that took care of the larger ones. To take care of the smaller ones, RBI thought of special liquidity fund through SIDBI, NABARD, so that the smaller ones also, the middle ones also, they are able to get. So the lines we got from SIDBI side, since we have been ever since inception of this SIDBI Foundation of Microfinance, we have been supporting MFIs for their growth and development and not only operations. So what we have done for around 40, see all the entities, banks, NABARD, SIDBI, everybody, we have been giving loans to the investment grade. And investment grade is triple B. The universe, if you see, it is just 56. Triple B and above MFIs, they are just 56 in number in the country. So out of that, 40 entities were given loans worth around 3,000 crore. Apart from NBFCs who are also giving loans to microfinance also. I'm talking about NBFC, MFIs and MFIs, that is around 3,000. And around 5,800 is what we gave to NBFCs. So total taken together, you can see that around 9,000 plus is what was given to the sector from SIDBI Special Liquidity Fund support. Subsequently, in second wave, when RBI came out with the second tranche of SLF, again, this assistance has been given. This was followed by third tranche of SLF, which has been given through innovative finance and all, through AIF route, PLI route, double intermediation and all, which is already going on. So we'll be talking about that later. But then to say that the crisis was unprecedented, yes, but at the same time, the support from government, support from RBI, and all of us as extended arm of government and RBI, whatever we could do, at least in terms of liquidity to the financial service provider, that was taken care of. At the same time, I fully agree, there was no credit demand. So for further passing the money to the ultimate borrowers, Government of India took some decisions, which we'll be talking about later. So this is what I feel we have done.
Sure, Arup sir. Thank you for that succinct pointer. Swapnil, if you could come in here, you had a bird's eye view of what was happening across this whole part of the world from your vantage point. Could you just take us through what you saw differently happening in India versus in the region?
Thank you. Thanks a lot. Look, I mean, coming in last, helps you a lot, right? The thoughts are already crystallized. So I think most of the experiences which my fellow panelists have indicated, it's very similar, right? So let me infer some of the things which we distilled. And of course, it came from India because we have quite a significant investment in India, but also globally through CGAP, which is a World Bank knowledge arm, and Symbiotics, right, which is one of the large fund managers, which have compiled about more than 40 countries' information in terms of microfinance institutions and what they have faced. So in terms of big picture, I think the only divergence, and I don't know the divergence, I would say, if I heard it correctly, I would see still, COVID as something which is we cannot see in the rear view, right? So I don't think in this panel any one of us are saying that look, COVID is past, right? So COVID is still happening. Today I'm speaking from Singapore. This is a country with almost 90% vaccination rate, right? But the number of cases are almost all-time high, right? So we still do not know what is the extent of this pandemic and when it's going to last. I think this is one of the unique features which we have. And that's why I think Vineet made a very important point that, look, whatever we know already of, right, we have still have not seen the full COVID. This is something which we never expected, right? We never heard, and hopefully we will, not only us, but maybe future generation should not face it. So it's very significant in terms of depth and breadth of the impact, right? So when we started looking at, and very early in 2020, because this is the region which was hit first, right? The Southeast Asia, it all started from Southeast Asia. We had a very significant portfolio in some of the Southeast Asian countries, and of course in India, where the lockdown was quite stringent. There were a lot of issues around portfolio quality. So we didn't had any parallel. There was no template in terms of designing for us a COVID response package, right? And most of the crisis when it happens, right? One thing which was unique about COVID is not only in terms of scale and the size of the impact, but also from a financial sector point of view, there was no ready-made villain through whom you can say that, look, this crisis happened because of this particular reason, right? In financial sector, if you look at global financial crisis or even some of the micro, which Deepak said, you have somebody to blame about, right? You have either the greed of the private sector or the overreach of the financial regulator. You always find some sort of soft spot where you can fix the or rather try to transfer the blame. And I guess that resulted, apart from the fact that this was really something which we all needed to come together. From our point of view, largely the COVID response has been very coordinated, right, among all different stakeholders, the regulators, the central governments, even provincial governments. So when we started looking at the whole thing, what we came out, and that was not really crystallized at that time, what we call it 3R approach, right? The first R was relief, immediately to ensure that there is a business continuity which is in place. The liquidity, which was the major learning from the financial sector crisis, comes in, and most of the central banks across different markets, the governments infuse significant liquidity. And I think, as my fellow panelists have pointed out, and it happens in most of the crisis response situation, the systemic institution gets a priority about the liquidity. And I think that's a way to go, right? So you need to first protect the systemic institution. So that's what it happened. I also heard in India there was a I think difference of opinion in terms of moratorium and restructuring. But the numbers which I see, I think that was a very good thing which most of the regulators, I think the CGAP has come out with that. Almost 115 countries came out with some kind of a moratorium, restructuring of loan. What it did was that it really provided the financial stability. Otherwise, what would have happened is that the intermediaries, the banks, the financial institutions would have been swamped with number of delinquent loans, and the borrowers would not have got a relief, right? So I think from a financial stability perspective, that was really important, and that happened in most of the countries. Now, if we took back, these are something which is still evolving, right? And we come to what Vivekanand has rightly pointed out in terms of the asset quality issue, right? But looking back in terms of big picture, right? Why this sector is important, and I don't know exact figures, but maybe you can dish out what percentage of total financial sector is microfinance sector, including small finance bank and some of the universal bank, or maybe Bandhan put together. But I'm sure it would be very small amount, right? So I think really what is the stake for all of us is, right? And if we look at, along with the numbers which we have, the global poverty has given, with 11 crores of fresh individuals going into extreme poverty. Whatever data points of different countries you take it, MSMEs have been really most impacted. The income loss in the organized sector is unprecedented, of course, but also many of the countries are really struggling how to put it back on the track. So what we are really looking at is, say, decades of, or at least 2-3 decades of economic development growth, and for our perspective, definitely financial inclusion, and whatever success we have got is going to be wiped off, right? So still the sector continues to be important. The key question is that, okay, the liquidity is there, right? It might be there, could be issues with regard to allocation of liquidity, but the funding risk, given the fact that we don't know the full impact of asset quality on the financial intermediaries, and whether it could turn into a solvency risk or not is not clear. We have to be really watchful on that. The second part, which is related to that, is we all have to realize that this is not about just getting another sort of a liquidity dose, right? You need to look at more holistically, giving them complete package, maybe a blended finance, equity, subordinated thing, which Vivekananda ji has said. So I will stop here, and we'll take on further as and when required.
Sure. I've let all of you all give detailed answers for the first question, because it sets the different perspectives in. But I would request brevity when we come into this another pointed questions after this. Vijay Lakshmi ma'am and Arup sir, we've heard a lot about the RBI support, government support, NABARD support, SIDBI support, all the good things that happen. But we also heard critiques. How do you deal with the criticism that the money eventually landed up with what Swapnil basically called the systemically important entities more than the smaller entities and the marginal entities that actually needed a lot more support at that point of time? How do you deal with this critique? Vijay Lakshmi ma'am and then Arup sir. You're on mute, ma'am.
Yes, Vijay. Yesterday in the opening session itself, all these were flagged. Now the question is, basically when you look at the Government of India and RBI, NABARD, SIDBI, all of us were very concerned about the issues, and we were all interested in having unhindered credit flow to the sector, because ultimately we have to look at the final person who gets it. Now, the constraint which we have, let me elaborate on that. As we all function within a framework. We have the NABARD Act, we function within that. Our loans to the NBFC MFI sector can be given only for 18 months. Actually, what had happened, when RBI gave this SLF, it was only for 1 year. So we gave it for 18 months, where NABARD's own funds were involved for 6 months. Okay, so that 4,216 crores for 6 months, it was our money which we had put in. Then the second thing is, especially when the ASLF came, and it was specially meant for smaller MFIs, a number of criteria were relaxed. Okay. Under normal circumstances, CRAR of 15%, net NPA of 4%, below 4%, net profit 3 out of 4 preceding years. And grading is an important factor, sir, because all of us are also regulated entities. The regulator himself supervises us, and we are subject to norms. Just as how the sector, the MFIs are subject to norms, we are also subjected to certain norms. And here what we do, the grading relaxation, we give up to MFR 3 for the NER people. What we did was, we revisited the norms with our board approval. We said to 3 notches below the top grading. Usually we give only 1 notch below. We gave 3 notches below the top rating. And for NER, we made it 4 notches below, because NER being a special zone, we relaxed it further. And but we could not compromise on the 6 months residual validity, because that was required. And then what happened? Usually, we have our own internal rating. That was also relaxed, because we have 9 buckets. We said 1 to 7 will be eligible. 8 and 9 were really, the performance would be very low. So that we were not able to relax. And also, Sa-Dhan had taken up the issue. They had given a list of issues. And based on their representation, what we did, the cash margin, which was normally 20%, we reduced it to 10%. With all, as Arup Kumarji pointed out earlier, only 56 out of 200 are BBB plus rated. So this rating is an issue. So this requires a larger perspective. Tomorrow, even if NABARD has to relax the criteria, whatever happens, you are looking at 3 to 4 years down the line, because most of the things are in our act, and you know how long it takes to modify it. Okay, so this is where it stands. We are aware of the issues faced. We are aware that the smaller MFIs are really facing a lot of hurdles, but very specific suggestions we would still invite. We would be open, because 3-4 suggestions we are already looking into it.
Sure.
Okay, thank you.
Thank you, Vijay Lakshmi. That was pointed. Arup sir, if you could come in.
Yeah, thank you. The criticism is there. Naturally, when we have 200 or maybe 180, 190 MFIs doing business, the business is for the poor. We understand that. And so if they are not getting money, the poor are not getting money. That is a concern of government, RBI, and all of us. And so to say that it was not at all there is not correct. As I indicated earlier, LTRO, TLTRO, and all those things were really meant for financial stability, but at the same time to take care of the smaller ones. I hope we are aware of this fact that for catering to the needs, great needs of the poor, microfinance is the route, and NABARD chose the route of SHG bank linkage program since 90s. And that was really a big move, good move. At the same time, during that time, only SIDBI realized and decided otherwise, that there is a limitation of bank branches in the country and they are not going to cater to all the needs of these people. So they started working on developing MFIs. They were helpful that time. And SIDBI with this, now fortunately, around 80,000, 90,000 crore is going from MFIs. So SIDBI has been there with MFIs all through. And so what we have done, while NABARD has started giving money to MFIs, naturally they have their own, both the programs are running. What the larger ones they are getting from there, we are also supporting them. But at the same time, when I talked about 40 in the first one, SLF1, that was given mostly around 26 or 27 were the lower ones, the smaller ones. But at the same time, I take that criticism that yes, the smaller ones further to that, they did not get the money. This is what you would see and you would be happy, and all of us probably should take comfort from that, that government and RBI is working on that by way of SLF2. Then SLF3, the announcement, if you see through innovative products to take care of the smaller NBFCs and MFIs, this 16,000 crore has been given to us. And what we are doing is, under SLF2, AIF type of route we are exploring. Already there is 750 crore fund is set up with one of the partners, which is active in this. For the first time in the country for BBB and below, our focus is BBB and below, BB unrated and all. Our focus is to take care of their credit needs so that the borrowers who bank with them, who take microcredit from them are supported. And AIF is one route where the bonds of NCDs of these smaller ones, the unrated and lower rated ones, that would be subscribed to. We have given 560 crore for that fund of 750 crore, where other impact investors are also coming as Class B and Class C. Apart from that, PLI, pool loan issuance,
sure,
with the players in the market, we are working out. Again, the criteria is BBB and below. So these are all things which will take care of the needs, great needs of such entities, which last time could not get. But at the same time, we must remember, last time there was no demand for credit insofar as requirement of repayment and all are concerned. Moratorium had taken care of their needs. To say that they were needing money, that money for on lending, that was not available, but on lending was not happening either. This year, it is happening, and we are going to take care of that. We have started working on double intermediation also, where we are trying to find the bigger ones, the banks, the bigger NBFCs, bigger MFIs, whom we are giving at slightly further finer rates so that they can give money to the smaller ones. So these are innovative tools which RBI and SIDBI in joint consultation, we devised this program, and this is how we are trying to take care of this sector.
Thank you, Arup sir, for that. Good to know that different ideas are at work here. I hope.
Can I just come in for a minute?
Sure, Vijay.
Just one thing.
Yeah.
See, because of all these constraints only, we have our subsidiaries. Okay, now we are trying to channel some credit through them also. NAFINS has given to, I think, 11 or 12 very small MFIs. So probably the MFIs can also explore that route. Our NAF Samriddhi and NAFINS.
Sure.
Thank you.
Thank you. I'm just trying to take a slight detour here because time is of essence here. This is to Swapnil and Vineet sir. Every few years, the microfinance sector in India seems to have a crisis. Whatever the reason, maybe it's a statewide, localized crisis, or it's a demonetization kind of crisis. To quote Deepak here, are Indian MFIs underestimating the liquidity risk as compared to the other risks that happen on their books? Because they seem to get hit very immediately. So because both of you all are either investors or lenders or have helped the sector across the country in various ways, how do we help make the Indian microfinance sector more self-resilient and sustainable? Swapnil, first you, and then Vineet sir.
I guess this is one of the key issues, right? And not only for MFIs but NBFC sector as in general, right? Some part of it emanates from the structural side of it, right? It's a wholesale funding model where you take wholesale and do a retail lending. But I guess the question was that are MFIs underestimating the liquidity risk, right? I personally feel, and that's what when we lend or when we invest in the institutions, we look at is these entities, even though they are lending to low-income households and underserved communities, in terms of being a financial intermediary, right? They have and they do follow the basic tenets of risk management, right? So in India, it's in a way I would say fortunate because the product diversity is not much, right? So still the lending is either to 3 months to between 52 weeks loan, and borrowings are typically higher than that tenor, right? So there is no structural ALM mismatch. There could be mismatches because of what we discussed, because of COVID and maybe demonetization, but those are different aspects of it. So I think one of the basic things the MFIs need to do on an institutional basis is to have that kind of a risk management policy tools. There are a lot of portfolio management tools which are available through various entities, which make sure that they are ALM positive in all buckets, in all time buckets. That's the minimum which we need to say. Even from a lender perspective, we have been putting this liquidity covenants for a long now, 3-4 institutions, but we do selectively only fund larger entities, right? But also some of the smaller entities, it has come out in terms of putting specific liquidity covenant given all the situation. But the key is, except maybe COVID, all other crises which we look at globally, it has happened more because of lack of funding diversification and the funders deciding suddenly on a knee-jerk basis to stop the tap, right? And to me, that's a key issue. The institutions have to look at it as they go along as they build their own balance sheet, to have a very clear-cut strategy in terms of funding diversification. And even pre-COVID, I don't think the MFIs, the Indian financial sector had some issues, right? In terms of the growth rate, we had one big NBFC crisis. Even in March, when we're talking about one of the first concerns which we had is there should not be a deposit tapering or deposit run on the MFI banks, right? Which never happened, not only in India, but nowhere else. But that was a real concern. So in terms of making sure that if we are not diversifying on the asset side, at least there has to be a reasonable diversification on the funding side. Now I would say it's a very fortunate place because as I think Vijay Madam and Arutji was saying, we have two very strong and wholesalers in the country. Also, a lot of commercial banks have been active in this space. So MFI portfolio as an asset class is very well accepted and well established in India. So that gives us a little bit of hedge. What we have to really look at is that what are the funding gaps, right? Are these lenders have been or these borrowers, MFIs have been able to get a more holistic solution from them, right? Of course, sometime, particularly in the crisis response, these facilities may not suffice, right, in terms of holistically looking at it. In post-2008 global financial crisis, IFC did set up what we call it a microfinance enhancement facility, which was to provide systemic solutions to larger MFIs, right? That still holds. I sit actually on the board of that. We have more than 100 existing exposure in 40 countries. It's doing well, but India itself is such a huge country, right? And the sector has grown tremendously during last several years. Maybe if there is a existing wholesale gap in terms of looking both the risk capital, the debt capital, the risk management solutions. When I say risk management solutions, it could be credit enhancement, risk guarantees, those kind of a solution. It might be a potentially good way to look at it in terms of creating a vehicle response, which is more sustainable in nature and longer duration time frame, which looks and caters to the sector.
Thanks, Swapnil. Thanks, Swapnil. Vineet sir, if you could come here.
Yeah. So, Vijay, I think some of the key areas that Swapnil has highlighted basically says the following. If the circumstances are not exceptional, Indian microfinance institutions have a significant supply of capital, no ALM mismatch. So therefore, fairly liquid in that sense. Whether you are small or large, whether you have 15% capital adequacy or 25, there is no dearth of capital, and the capital is coming at a reasonable price. We are probably one of the most heavily regulated financial institution in the country amongst all, with a margin cap in place, etc., which are quite extraordinary. I mean, to have a margin cap is, in 2010, I thought this was a death nail, but somehow microfinance institutions and microfinance clients actually figured out a way to survive within that. And so you can actually see two things. One, the microfinance client is very resilient. And if I give you the numbers from what happened in the first wave, September, the moratorium opened and we went to the market, and with some level of restructuring across the board by all institutions, by March, we were pretty much coming back to normal. That means it took 6 months for microfinance institutions to find their way back into the system. And that tells less about microfinance institution, more about the microfinance client. And I think COVID, which is an extraordinary event, what it conveyed to us is the resilience of the microfinance client, even though the peer pressure activity has come under tremendous pressure. And let's not really kid ourselves that what was going on in 2008, 9, 10 is actually relevant in 21, 22. I genuinely believe there is a massive shift that is taking place on the technological side. However, if microfinance is as important as the government of India, the regulator RBI thinks, and both NABARD and SIDBI, the largest and the long-term supporter of this space thing, I think we have to look at Indian microfinance in a slightly different and evolved way. We have to accept that this is actually an engagement where lending meets social objective, and it is not pure lending. And that is very critical and has to be taken on board. This is what the regulator has said yesterday. And if this is the thing, then you cannot apply the classical norms of lending to microfinance. If the idea is that poor people need to receive money, and if there is an acceptance that poor people have lost jobs, then I really do not know how politely can you collect money when person doesn't have money to eat. And how does a 4% or a 6% or 8% PAR becomes a criteria? I mean, how in this condition? It's a very logical question. I understand the limitations with the institutions from a lending perspective. But then we are also saying in the same breath, this is exceptional. This is once in a lifetime event. So how can the response be very normal when the event is abnormal? I'm not saying the response has been not extraordinary from the government, but on the norm side, we are still quite ordinary. Not from the liquidity perspective and the guarantees that government has given. The disbursement that has taken place is still following a reasonably, in my view, a slightly lower bar than what the circumstances ask for. But coming back to the critical point that you raised, what should we do? I think there is a need for creating specialized vehicles that are long-term. Remember, there was Friends for Women World Bank, and there's Aranya, who are specialized wholesale lenders who can actually move the norms faster. There are private sector banks, etc. But then private sector banks are basically like doctors or are good bankers. They will actually offer you the umbrella when the sun is shining and will take it away when it starts raining. If we take that into account, we have to have specialized intermediaries, given the number of time the risks are coming through. And those should be heavily capitalized by large institutions so that when things go back, they actually increase. And so there you have to create an institution that can probably help the microfinance institution with the underlying statement that microfinance client is resilient, requires 6 to 9 months to come back. And I think if you accept this, and I think we have 35, 40, 45 years of history, and we have dealt with multiple crises, then I think it should, this institution will be very viable, very profitable, and will be very important for the institution. So I'll just stop here.
Sure. Vinny sir, I'm actually going to ask you to continue here because we are very pressed for time. But you and Vivek sir, if you all could comment on the new norms, because that's where you were going, and talking about the norms itself that are being proposed, and these are the revised norms that RBI is proposing from a liquidity perspective, from a business perspective. What are the key suggestions? And if you could keep it brief, what are the key suggestions you would make, Vineet sir, that you can add on to from the last answer? And then Vivek sir could possibly comment.
I think the RBI working paper is actually was quite enlightening and very important. For 3-4 years, we have been actually lobbying. So I think it's actually something which has come out quite well. There are some areas that I still would really ask RBI to look at. The most important is the diversification. If you are asking somebody to put 85% of their capital into one very risky segment, which they themselves classify as risky, then how do we actually continue to operate with only 15% leeway? Even if you are allowed to price for risk. Till today, microfinance institutions were not allowed. For the last 10 years, we were not allowed to price for risk. If the pricing for risk, which is what the paper says, is allowed, that means we will actually behave in the same manner. But with no diversification, you are allowing the institutions to still deal with a very high risk customer. So my biggest ask would actually be to very specifically look at this 85-15 and actually say, my ideal demand will be 50-50, but 60-40, 70-30 would also be a fairly forward-looking stance to be taken, given that that 15% actually includes your cash and any other investment as well. So, and I think it should actually be only on the portfolio. So those are the two recommendations.
And actually, small finance banks have a lower bar than the MFIs, and they are supposed to lend to the same segment.
Banks are actually, so we are actually the stepchild, we accept it. I think, I don't think so. I want to dispute that as well. We are the stepchild and there is no problem with that. Partly because banks have different kinds of regulations and different kind of live through. And so we are also not really being asked to have SLR and CRR as well, and many other obligations that the bank takes. So I don't think so that could be a point to argue with.
Sure. Vivek sir, if you could come in. I think that's an issue.
Yeah.
Vivek, sir,
so I echo what Vineet ji said. In terms of regulation, again, there are issues. But then what happens is, the small finance banks were expected to lower the rate of interest, but now if you look at the rate of interest, small finance bank charges higher than what the microfinance charges. This regulator has to also look at these code of conduct and affordability of the micro borrowers to borrow. Removal for the viability of the organization is fine, but also look at the large supplier of credit and what they charge. So this is something, disparity will be there, and it will have a social backlash. So we look at survival of the institution, but also have to look at the social backlash. That is something which you have to do. One more issue that I still not grappled with was this regulation of the microfinance. So there are crises coming. So in Assam, some crisis came, and some of the other governments may think of. This problem of state subject has not yet been resolved. So this is something which will create an atmosphere whereby some of the social risk can be taken care of. That's one. The other is recently RBI, in terms of regulatory framework, classified the NBFCs based on the sizes. So similar such stratification is required in microfinance sector also, because whenever a regulation for NBFC is put forth, NBFC, MFI, which are small, also get sucked into that. So various banks have to make various weighted asset norms and all that. So therefore, when it has been made as a class, here also stratification and some concession for less rated or less sized NBFC would go a long way in streamlining the sector. Thank you.
Thank you, Vivek sir. We have very little time left. I'm going to put everybody in the spot here. So we're going to go in this order. We're going to have Swapnil, Vijayalakshmi ma'am, Arup sir, Vivek sir, and then finally Vineet, because Vineet's worked with so many entities over the years in India. One short suggestion, one quick suggestion that you all can make. And at the same time, I just want you all to keep in mind that there are a couple of questions where somebody has asked a question about what innovative financial instruments can be designed. So if you want, you can quickly talk about that as part of your suggestion. In that order, please.
So I guess if you're asking for a silver bullet, on the resilience side, the institutions have already shown on the asset side, right? They're fairly resilient. We all know that has been tested. On the liability side, no second thought, there has to be diversification. But when we say diversification, we forget that what I've been reading, and other practitioners and maybe the lenders could confirm to that. In fact, the diversification is slowing down, and that we really need to look at it. There was an important funding line coming through the mutual funds, right? The NCDs, they have dried up. Variety of reason may not be related with the microfinance sector, so diversification has to happen. We already spoke about, if required, and if there is a gap, of creating a crisis investment vehicle. And innovative product is all function of, if you have intermediaries and they have to reach to a client, they face ways and means of innovating it. It could be a variety of instruments between straight equity to straight debt. And to me, it's more of a structuring a technical issue.
Sure.
I will stop.
Thanks, Swapnil. Sorry, I'm rushing everybody here because I'm very clear that there's a session that comes in after this. So, Vijayalakshmi ma'am.
Yeah, Vijay. See, one thing is that NABARD is heavily invested in this sector. We are very sensitive to what is happening in the sector, and we are aware that the smaller MFIs require a lot of support. But at the same time, what I would like to bring to the notice of everybody here is the All India financial institutions are going to go into Basel III from April 22. So that throws in its own challenges in terms of provisioning for probable NPAs and looking at the entire commitment, not the disbursements, it's the entire sanction. So given this background, I think, a policy level rethink is totally required so that, whatever are the demands from the sector can be met. Thank you.
Arup sir.
Yeah, thank you. Level playing field for all types of microfinance provider is in the offing. That is going to be a good thing for all. Aberrations are there, and so concerns are being raised, but at the same time, this is going to help. But at the same time, we as DFI, we are a regulated entity. So from that perspective, as also extended out from regulator and government, what we would like to have is the comfort and confidence in the sector in terms of the intermediaries, MFI. Some of the bad examples like Samban and others have happened. So this is what the sector MFI has to work on in terms of which way we develop the systems and mechanisms whereby DFIs and other investors and lenders, they get comfort that yes, even at the time of crisis, we can give, because all through I was part of that process where every segment's requirements were seen through, thought through, and followed by action. But then this can continue only when there is a comfort and confidence in the authenticity of whatever is happening through MFIs.
Thank you, Arup sir. Vivek sir.
Yeah, one is whatever as a policy we prescribe and think in place, implementation needs to be really fast. You can see the gap in policy formulation and the implementation. Microfinance is known for quick. Turnaround time of loan is less than 5 days. So the other organization also. And another is first loan loss, like whatever microfinance, the first few percentage of if it is knocked off, it gives them a relief and it will really contribute to the growth of the earning. It should be thought through, and some research as to what probably is going to be the loss, and some loss if the government can absorb, it will grow very healthily. Thank you.
Thank you, Vivek sir. Vineet, I finally managed to call you Vineet at the end of your session.
Yeah.
I'm going to let you have the last word.
Thanks, Vijay. I think let me actually bat for the sector. Microfinance sector has the experience of dealing with every crisis and has come out very well, very beautifully. Not because microfinance institutions are smart, it is because of those hundreds of millions of poor women who actually have, under all circumstances, stood the test of time. Now, the appeal to global institutions, Swapnil is there, to SIDBI, NABARD, let down the microfinance institution, don't let down those hundreds of millions of women who actually on their shoulders have built this entire sector. So it's not about microfinance institution, their size, it is about the women and those women who have never let us down, neither you nor us. And I think this discussion is not really about the relevance of microfinance institutions or the intermediaries or small finance banks or the banks. It is about the women and their ability. So let's not cast aspersions on their capability, because failures, and you are absolutely right, Arup sir, that you mentioned about what happened with Sa-Dhan. But if it can happen with ILNFS, a very small institution in one corner of India should not actually be a reflection of every institution in the country. More so when these institutions are around. There was a lapse. I think we should gracefully accept as a sector that we made a mistake. But I think there is a great opportunity for all of us, given that next 12 months are going to be very good. And I'm actually making this prediction. Most microfinance institutions are going to be very profitable in March 23. But this is a time, therefore, to actually think strategically. As Swapnil pointed out, it is not about innovation in the instruments. Innovation in the instrument is actually done when things are going very well. You don't do it when risks are very high. You make things simple. And I think at this point of time, the most important thing that I would actually highlight is think strategically on diversification and do bring in a crisis vehicle that would actually increase its lending when the rest of the diversification goes down. I mean, you talked about any other things. I think those challenges will come in these times of crisis. So I'll just stop here.
Thank you. Thank you so much. I'm very, very sorry to have rushed all of you on your answers. That's on me, because I had to be the one keeping check on time. So now I'm going to just thank all of you for taking out the time, both for this session and for the pre-session, where all of you were able to share thoughts so that we can have this tight session right now. Thank you so much. And over to you, Samriddhi and Satish sir.
Well, thank you very much, Bijoy, and to all of our panelists. Well, you have, in fact, Bijoy conducted the session very, very flawlessly, and I must commend you for the time. You finished right in time, and of course, like to all of our panelists, thank you. I know we had less time, but thank you so much once again for sharing with our audience your insights. And I'm going to very quickly request Mr. P. Satish to come in and formally, on behalf of all of us at Sa-Dhan, thank our panelists.
Yeah, thank you. On behalf of Sa-Dhan, I would like to first thank Bijoy for his excellent moderation, where he was able to bring out the entire facets of liquidity of the microfinance sector. And I would also like to thank Deepak Alok for his short but introductory lead presentation, which set the tone. And all our speakers, Mr. Arup Kumar and Vijayalakshmi from SIDBI and NABARD, which are the, I think, I yesterday also mentioned that they are the two eyes for the microfinance sector and two strong pillars. I think with these two with us, the sector can always sleep soundly. And you brought good perspectives, and I think though there are constraints for the DFI, still you are trying to support the sector in a big way. Then thanks Vineet for your very insightful comments, and I do agree that we are all here for the people, the millions of people at the grassroots level, and not really intermediation can be done by anyone, but we are actually interested in the livelihoods of the poorest of the poor, and we will have to work for that. And thank you for your insights. And again, Swapnil from IFC, with an overall Asia Pacific perspective, you are able to give us an overall picture. Then Salimatji, small but an effective MFI, and even with a small institution, Salimatji is a thought leader and insightful leader for the microfinance sector. So I would like to thank all the panelists, and again our moderator for a very good moderation. Thank you one and all from Sa-Dhan side.
Thank you. Thank you for that.
Thank you.
Well, thank you very much, Dr. Satish, and to all of our panelists once again. We'll quickly move on now to our next session. And our next session for all of our audiences is on financial inclusion, gender, FPOs, and collective. And as you may be able to see on your screen, our panelists for our next session have already joined us. We have Mr. N. Srinivasan, the sector expert. He is going to be moderating the next session for us on financial inclusion. We have a presentation by Mr. Rahul Bist, who is partner Prime M2I Consulting Private Limited. And Ms. Chetna Gala Sinha, founder and chair of Mandeshi Foundation and Mandeshi Bank, will also be talking to us. Mr. Emmanuel Murray, who is a senior advisor, Caspian Impact Investment Advisor Private Limited, will also be talking to us. Dr. Dipali Pant Joshi, executive director with the RBI, will also be sharing with us her thoughts and insights. And Mr. Arshad Ajmal, who is the vice president at Sahulat Microfinance Society, is also on the panel this afternoon. So without wasting any time, I am going to hand it over to our session moderator, once again reminding our speakers to keep themselves on mute when they are not talking. And for all of our other audiences, please feel free to ask your questions. All you have to do is post in the chat box. You can put in your questions there in time, of course. And of course, our moderator will be able to take up those questions. So with that, I'll hand it over to you, Mr. N. Srinivasan, to take the session forward from here.
There's still some time is there for the session to start, I think. Another
All right,
5
we
minutes.
do. We actually do.
6 minutes.
Yeah, about 6 minutes, but I was just hoping that if everyone is here, maybe we can start so that, we get that extra time for questions. Whatever we are comfortable with.
To the moderator. Mr. Srinivasan has to decide when to start.
Right. Mr. Arshad Ajmal, can I request you to fix your laptop a little bit because your head is getting cut? Maybe just move it a little further away from yourself.
Can you give us a couple of minutes before we go live among the panelists?
Yes, of course.
I'll have a quick word and then, okay.
Sure. We are all live at the moment.
We are live now?
Yes, we are live.
Okay. Okay. All right. So I think better we start off then. No major this thing.
Sure.
So I think we have an excellent panel of experienced practitioners, sector icons and all that. But I'm also happy to see some of my great friends. Emmanuel is there and Dipali ji, after a long time I am just seeing her. In terms of this particular session, we are going to discuss maybe financial inclusion, more particularly in the context of women collectives, how we actually manage to get them included in the grander scheme of things. Of course, we have for such a large topic and for an important constituent about an hour's time and fairly experienced panel. We will try and then bring ourselves very sharply to weigh in on some of the issues and also some of the pathways that are there already that's existing. We have a short presentation to begin this with by Rahul. He'll take about 4 or 5 minutes to get through laying the groundwork on what's happening there. And then we follow it up with a conversation among the panelists who are out there. I think to begin with, if you look at women and financial inclusion, a good long time back, I think sometime in the year 2000, Reserve Bank said the first time, look, we have to look at least 5% of credit going to women as part of whatever the banks do. And with great difficulty, I think banks reached something like close to 1%, and that was being celebrated. But on the other side, we had a very vibrant self-help group movement, which was 100% women almost, barring a few stray men groups here and there. Women were considered to be the prime choice. And now, 20 years down the line, when we look at, we have got about, say, 113 million women in self-help groups, 130 million, and we have got almost about 96-97% of the microfinance loans, which are again about 110 million or so. They are of women. And this large number, especially when it comes to bottom of the pyramid interventions with credit, which is a more, what do you call a higher order financial inclusion instrument. We see women pervade this. Then what is it that we are talking about further in terms of financial inclusion in this? Have we not achieved it? That's a question that brings to mind. And again, cooperatives, when you look at typically the small people, the rural people, those who are in agriculture, The primary agricultural cooperatives, they again have a fairly large membership out there. That's again, the membership is about incidentally 132 million. We seem to be floating around 110 to 130 as numbers when we talk about these three different segments, the two segments in microfinance, both sides, and of course the cooperatives. So are cooperatives inclusive? Do they actually do a good enough job of what do you call bringing people into the financial mainstream? These are of course questions. A fundamental issue is about whether this is reckoned as financial inclusion. Later on, I will be asking Deepali ji to what do you call talk us through this.
Mr. Srinivasan, I'm sorry for interrupting in between. We've just been joined by Ms. Mamta Kohli too. She's a senior social development advisor at FCDO and is a part of the panel. She's just joined us, just to let you know. Yeah,
Mamta ji, welcome on board. We are what do you call looking forward to hearing from you shortly. And is Deepali ji already logged in? Hello. Okay. All right. So as I said, so we will try and see what is it that's being done in the context of collectives. What is it that is being done to bring women into the financial services mainstream? And what are all the aspects of policy operations, products, and also customer protection that seem to bring a combination which is either enabling or at times not so enabling in terms of making this inclusion possible. I think to kick off the session, I would invite Rahul Bisji to what do you call make an initial presentation, and then we continue with our conversation from there. Rahul ji.
Yes, thank you, sir, and good morning to you all. I have a very brief presentation, sort of to set the tone for the discussion. So, can you see my screen?
Yes, please. Loud
Okay.
and clear. Yes.
Thank you. So, so we all know that the kind of stellar role that women collectives have played in financial inclusion, and women groups are almost ubiquitous across countries and culture when it comes to financial inclusion. So we see SHGs, JLGs here in India. We have VSLAs and ROSCAs of various kinds across the globe. And hence the role of women collectives in financial inclusion, I don't think can be overstated. Why women groups have been so successful, particularly in the matter of finance, it has been noted that women show responsible financial behavior. They are more trustworthy, creditworthy. We have seen the repayment rates in microfinance. They use money more judiciously and generally tend to utilize the money for the overall benefits of the family. So that is why the financial institutions lending to these women collectives also, put in so much faith in these groups, completely unsecured lending, and still we see such high repayment rate. Mr. Srinivasan sir has already given some background. We have a very good and a very strong network of women collectives which are involved in financial inclusion in our country. We have 1.12 crore SHGs, and almost 90% or so would be women SHGs, and 53 lakh women SHGs are also credit linked. We have around 1 lakh crore of loan outstanding to these SHGs. On top of that, we also have JLGs, which are again a form of women collectives, which are close to 1.3 crore JLGs in the country currently. Now, all this sounds very good, but the question now that we have to ask ourselves is that, is it good enough? And I would like to present some more facts on that front, that while we have women playing such a leading role and spearheading the entire financial inclusion movement, we see still very low representation of women when it comes to enterprises, micro enterprises. And this number, as you can see from this chart, falls even more drastically as we move towards the bigger and bigger size enterprises. So women are very, very underrepresented, or they don't have much ownership in the enterprises. If we come to another form of collectives, which is more formalized, like farming, then we find that it is more women in rural areas which are engaged in farming than compared to men. And still their representation in FPCs is quite low. So according to this Ajim Premji report, out of over 7,000 FPCs in the country, only 3% are women-only FPCs. If we talk of cooperatives, the picture is more or less the same. We have a very high number of cooperatives, but women-only cooperatives are very low. So the key questions that probably we can discuss today, or we need to ponder on, is that despite these 3 to 4 decades of JLG, SHG movement, where women collectives have played such a great role, where they have helped in or spearheaded rather the financial inclusion, can they do the same in economic inclusion of women? So this is what I think is the key point, that we need to take them to the next level. We have such huge network of these collectives. Are we harnessing their potential to the most or not? And what more can be done that we leverage on these collectives? So with these initial thoughts, I would request the panelists and others to please, we can discuss on these points today. Thank you, sir.
Thank you, Rahul, for a very concise presentation, bringing out just not the numbers, but the issues as well. Can we stop sharing the presentation? Yeah, thank you. I think first I will turn to Mamtaji with her experience of being part of several, what do you call, projects from a bilateral donor, what do you call, platform, looking at how you bring women into projects, and sometimes exclusively women-led, women-driven projects as well on the ground. There are a couple of questions on, when we say financial inclusion, the word inclusion itself is a supply side initiative. The demand side of it, what makes people want to be part of the financial services mainstream, and are the enabling conditions that are there, are they good enough? The second is about, is it like people are hungry, but we give the prasad from a temple, rather than looking at they actually require a large sized meal. The point that Rahul made, we start off with providing access to women of small loan, but what about the enterprise space? Do we actually support them in an inclusion sense from a viable enterprise support mode? So I would like Mamtaji's views on what are those remaining challenges in this. Are we happy with where we are? And how does she think that we have to proceed on this? Yeah, Mamtaji.
Thank you, sir. And thank you, Rahul, for a very concise presentation. And you really hit the nail on the head, as they say, cliche, but true, that we haven't seen women's progression from the microloans to actually having businesses that operate, that run. So I'm going to go back a little bit, and as I see it, I think this is one industry which survives a lot, which works on women, but has not really looked at them as what's the right word? I mean, the client term is used and that sort of blankets everything, but they haven't looked at it as someone who they, as a customer, as a consumer, that they want to invest in and they want to grow. So I think they haven't looked at, women from their life cycle perspective, from their needs perspective, and their capabilities perspective. And I think that's why we see this gap right now. But I'm glad that it is a sector that we are all talking about it, and we're trying to see how we can do things. This would necessarily mean that we look at new ways of working. We look at new products and services. We look at what are some of the capacities and also capabilities that we need to build in our partners, in both the delivery partners and the women that we are working with. So in terms of, if I were to just very briefly talk about, I see 4 things that we need to do. One is we really need to figure out who is it that we are still not serving. There is still a very large chunk of women, very poor people who are left out. There are younger women whose priorities, whose perspectives may be different. They probably don't want to run an enterprise, but they want to run an enterprise that's aligned to the gig economy. Are we ready to provide those kind of services, that products? And again, those skills and capabilities. I think the second, in my view, is the entire issue of digital access. There's a lot of discussion about it. There are a lot of apps and there are a lot of platforms available, but are they developed and researched in line with how women operate? Their access to those phones, I mean, typically you will see that they'll get the most outdated phone on the family. As the family members move up and to better designs and to new models, women end up getting the small phone. So, really this entire space of digital access, physical access, but also learning, how do you use these apps, and are the designers of those apps making it, keeping women and their capabilities in mind. Third, I would say this entire space of financial services, it's not just savings and credit, but how are we helping them access other products? How are we helping them build their wealth? I mean, there are a lot of small savings, small even SIPs, if you look at it, you only need to do 500 rupees a month. Are we looking at those kind of wealth management services that I typically get in cities? And my final point is to make women and their work more visible as institutions, as somebody who's working with women, have more women in leadership roles, but also on the ground level operation where community women are seen, they're interacting, have more women out there. And I think those with more digitization and more women out there, this logic that it's difficult for women to manage financial operations in the field does not probably hold true anymore. So we need to look at our own organization, institutional system. So I would say, to sum up, 4 things: looking at the financial services package as a whole, looking at digital access and capabilities as a whole, looking at who's not included still and how do we help them, and third, of course, making it more visible in our institutions and organizations. And this will require different ways of working, different products. I think there was a panel discussing it yesterday as well, and new ways of working. So that's it from me. Thank you.
Thank you, Mamtaji. The issues relating to, how you digitally include women, just not saying, you are part of our framework. I think that's absolutely, and going beyond savings and credit. And can we actually harness the power of so many women being in the sector to bring their leadership, abilities, provide the space? I think excellent points from that. When we come on the second round, maybe I have something to follow up on this. Now I turn to one of the icons of women in financial inclusion, Chetna ji. I think people thought bringing women in is a difficult enough job, at least say 15, 20 years back. And cooperatives is even a tougher ask. You try to marry these two to provide a comprehensive suite of services for women. Now, I would like to know from you. Are women better included when we go in for a cooperative or a collective mode? Is that the reason why we find women in, say, either JLGs or self-help groups or in cooperatives, not so much as in the case of individual clients? How do you look at the functionality of cooperatives in future?
Thank you, Mr. Srinivasan. And I'm directly coming to the answer to the question because I do think that it's very interesting, the whole question. I mean, and the context which Mamta ji also built up. So number one, you have asked that do women like to come as a collective? My first answer is yes. They like to come as a collective. They like to be as a part of the collective, and they like to take the maximum opportunity of the collective in the primary phase. When I say that, what I mean is that what does collective gives them? Number one, getting out of house, right, gives them a one sanctity that I am not alone. There are 15 other women, there are 10 other women, there are 5 other women who are going. So that comfort gives them when they get out of the house. That is one. While working together, I don't say that there is a bonding or something, but generally with women, it always happens that when we are doing something collective, as Mamta ji said, that the pride factor comes in. And I think that is very important. On one side, the pride factor comes in, and on the other side, the whatever challenges are, you build the courage to face those challenges. Here, I will share with you a ground level reality of Mandeshi Bank. When we were setting up the bank and mobilizing the share capital in small villages in India, now, if one woman will buy a share capital or say invest, family will ask, right? Or she will have to, whatever, some would raise question. But if there are 100 women who are doing it, if there are 1,000 women are doing it, then it becomes a sort of a collective power. Now, that is a primary phase. And then when they were we were in the process of licensing, lot of local, when women get collectively together and get into the action, there are major challenges in the villages of India. It's a very different socio-political situation, which I'm not going into detail, but I'm just stating what our women have faced. So when we were setting up that, lot of local political leaders will say like, इनको तो कचरा निकालने भी नहीं आता है, ये लोग क्या कचरा बैंक सा करेगी क्या?
Oh.
Now, when you are criticized that way by society, then your family will again pull you back, right? In that sense. But if your ecosystem is strong, if you say that no, this is going to happen, we show it, we show some positive action in the household also. And I'm so proud to share with you that I had forgotten this statement also. But when our bank shifted in the new building, and I invited all our promoting members that you see what we had created and now where we are, they reminded me and they spoke from the stage saying that everybody was thinking as a Kachra bank, but see, now we have become a biggest employer in the district to women. So that pride, and it takes time. So that is one I would like to say. But now, and the second phase, so I'm answering a question. Primary, it is very, very important. Collectives are very, very important. Now, when the second that, and I was in the previous session also, that, but the time comes that they are ready to take up individually also.
Yeah.
Right? And there I'm saying that at that time, supply side fails. And when I'm saying that, why I'm saying, I'll narrate you one example and close this debate here, is that when women are ready, that okay, I will go from micro credit to micro enterprise, or maybe I don't want JLG loan and I want something else. How much supply side is ready to listen and how much it is prepared for the change, and how much ecosystem supply side has created. So I'll give you here an example that when we were doing, we have Mandeshi Bank has both SHGs and JLG. Mandeshi has impacted 500,000 women entrepreneur. And while we were launching, I saw in a weekly market a lady selling vegetables. In spite of having a bank account at Mandeshi Bank, in spite of being a SHG member also, she was taking loan from money lender in weekly market. I asked her that you have an account, you know that you can get the loan, then why still are you taking from money lender, right? Because she knew that bank is there. You know what she said? She said, your product, I mean JLG, whatever loan, there are a lot of papers, it takes time, it is whatever, now we have resolved those issues. But the one thing she said was very important for me to listen, and she said that you have monthly installment. I don't have salary. I earn daily and I want to repay daily. How money lender gives me that. The lesson for me was money lender is listening to her. We are not listening. So here I would say, and then we designed an overdraft facility where these women can take a loan at any time, repay it, and build the system around that. When I'm saying build the system, means all the technology, CBS, real-time transaction, overdraft facility, she has to get the message immediately. Everything is there, right? Product does not come in solo. You have to create the whole ecosystem, including the rating also. And we designed the credit rating tool for these women maintaining. We begin with the digital diaries, and now they have a digital app on Mandeshi's app on that, where they know everything what is today their working capital. I stop here and I just want to share that I was so thankful to that lady who said, I reject you because you have not done your homework enough, you are not innovative enough, our cash flows are different. Understand our cash flow, design it. Our time is valuable. If you cannot cope up with the time, then improve yourself. And third, about the trust, that whenever I repay the money, I want SMS with that. So I'm just saying that on supply side, at the secondary level, creating those ecosystem for last mile women becomes very important. And I feel that challenges on that side, which we need to address, including all fintech companies, rating agencies, and the either it is MFI, cooperative banks, or cooperatives who are into product, credit product and processes. So I would say that this was the lesson I learned from them. And I always emphasize when you learn from these women, what you learn is don't give poor solutions to poor people.
That brilliant, Chetnaji. So what do you call, heartwarming to see that, yeah, people come in a collective to begin with. There are different reasons just apart from inclusion, but there is a time in which they would like to be treated as an individual in terms of what the financial services can offer. Yeah, some will be in group, but some have to be individual. But also the basic question that we started with, are we so much in love with what we have designed as supply side people that we fail to listen to the loud voices from the customer? Being demand responsive, even when we say we are inclusive, that's a very prime requirement. And of course, you did talk about the digital technology coming in to keep the women informed. It is not as if they will not be able to use that. They are using it big time. Very powerful learning, and the need that we have to continue to be listening to them, just not saying, okay, I have given you a service. I would now turn to Ajmal ji, who is running a very different institution again. I think when he started off, people thought that this is not going to last long. When you say, I am going to give something that does not carry an interest rate in the financial sector, but then the success that's there for the last 11 years, it speaks for itself. Well, one of the things that I wanted to ask you is, continuing from the theme of where we started, bringing women on board into financial services, is it like, oh, we have not brought them on board, we should be somewhat fair to them? The sympathy factor of having to do something for them, has it been sufficiently replaced? Because now you are offering a very differently designed alternative product in the credit space to women, because your borrowers are also substantially women. So is the sympathy factor now replaced by, they are a legitimate business case and they have every right to be there as my customer, not because I think, oh, I have to have some people out there, just like Karipata in an overall meal. Yeah, over to you.
Unmute yourself.
Thank you, Srinivasan ji. I think there is some confusion about our model. And when we see interest-free, it is not, I think, apt terminology, and we failed here. Our model is this: if the loan is consumption-based, we will charge only the operational cost exactly. That we say scientific costing method. And if you create wealth, you should part from your profit with us also. So in brief, so it is not a part of sympathy, because in cooperative, all the funds comes from the depositors. It is the depositors who puts faith in the cooperative which they created, In the case of Sahulat, we have created 37 cooperative across 12 states. So this confusion, I think should not prevail. It is out of sympathy. It is a sound, operational, and self-sustainable model when we say this. Moving in on the part of women inclusion, and our experience is this. I think we should collect data about the cooperative credit society. What is the size of member? My experience is more than 60% in the cooperative credit society which we run are only women, and we have the stories of women who succeeded in more than men. So leaving that aside, about my model, what I want to stress, this is the time when we are facing a discussion on the cooperative. I think Chetna ji is well aware that a new Ministry of Cooperation is in place, and new policy will come. A new policy will come, and Multi-State Cooperative Society Act, there will be some tweaking. This is the issue that cooperative society grapple with it. I hope at some time Sa-Dhan will make an opportunity, and they are doing it, what to do with the cooperative society. Srinivasan ji, you have rightly said, microfinance, JLG model or SHG model, it is the supply side story all and all. But the cooperative is a process where you can compare it. The deposit is here mainly for creating the loanable fund. So here a process is started. This process is slow, no doubt. It will take time. But this process is holistic. And when we talk about microfinance, we miss two things. In cooperative society, deposit is the mainstay. Deposit is the mainstay. And when we were talking in 70s and 80s, we were talking 5 parts of microfinance: saving, loan, insurance, and all those things. So supply side, there is no stress on deposit, but in cooperative, there is deposit and there is lending. Furthermore, when we talk about microfinance, it is about the capacity building. It is about capacity building. Just think, a women, in Chetna ji, you can take the case of Anpurna of Pune, and you can take the Jayashri Ben Vyas, the empowerment of running an organization. It is more than taking the loan and making individual destiny. Cooperative has the power to change and manage the society with the women and with the weaker. So this is the point which makes it important, and that is sustainable. I want to point out here, because New Cooperation Act is there, cooperative faced two fundamental issues, which was settled by the Supreme Court just a month or two back, where it has been finally decided that creating a cooperative society is a fundamental right. This is the moment. But on the ground you will face, there is a lot of problem in registering the cooperative credit society. Number one. And number two, in a directive principle, it is explicitly said that it is autonomous organization. So I think cooperative leaders should converse with these two things about this. And finally, I will pitch in for developing cooperative. a recognition is needed, the role of promoting agency for the cooperative. In Sahulat is a promoting agency. Sahulat is not a cooperative. It is registered under Societies Registration Act. And we are forming cooperative at the MSCS level, at the state level, at the district level, at the taluka level. So I will end here, and myself is stressing about the structure and the moment in which we are living, where cooperative can take a big leap. Thank you.
Unmute yourself, unmute yourself.
I am so sorry. It's normally difficult to mute me, but I have done it myself. Yes. Admiralji, thank you so much. I think as a profit sharing model that you operate, you have clarified that there is no sympathy that is involved. The import of my question was, in general, across the sector, we think, oh, we have to be somewhat fair to women. Have we got out of that? You say, yeah, it is so. But also you make the point that cooperatives are a powerful structure in which the process can engender a lot of inclusion that is meaningful, and the variety that you can offer in the financial sector can be significantly large. And also you point to all the industry leaders, including Chetnaji, who is there. I think the members coming together, their deposit driving business, they see that the business is run in a disciplined manner. I turn to my friend Emmanuel Mare. We have talked quite a bit about cooperatives now in the last about 15 minutes. Now we have got these FPOs where there are cooperatives, but also the focus is more on companies there.
Srinivasan,
yes.
When do you want me to come on? Or
I think I sent you the mail. You will come next to this. Yeah.
All right. Thank you.
So, Mareji, in this, what's happening is the FPOs, which is both in cooperative and the company form, they are fairly active, but are they inclusive? Are they geared to take the inclusion principles on board? Because these are member driven, where members take a share in the what you call company's capital. And how do you see these contributing to principles of inclusion, being commercial organizations?
Yeah, thank you, sir. I think most farmer producer organizations that are male dominated do not have women representation of any significant nature, or even if they have, it's just a nominal presence of women. But where there are women FPOs of any form, there is a much greater degree of inclusion that is evident. And I think even in terms of participation in business, they have a wider inclusion across communities also. So that broadly is the observation. And to an extent, I think the SHA movement has brought in a gender divide in the process also, of men, women. And so good old days, IRDP and others were not that exclusive on gender side. And that is one reason that we see. On the marginalized communities, largely, I think there have been challenges in, even as you said, getting them to contribute towards share capital. And that is where the challenges begin. So they say we'll contribute partially, we will come back. What will be the gains to me if I become a shareholder? So those really continue to be, even in some of the older FPOs, full share capital contribution from some of the small farmers isn't coming fully. And that continues to be a business. But again, on the inclusion side, across communities, we see more or less, as Chetnaji was saying, the FPOs mimic the social structure of rural India. And therefore, by, let's say, by default, or what we will call a first right of refusal, the dominant community thinks they should lead these institutions.
Wow.
And if they are not ready to do it, then others can take that space. So that I think, because many of these promoting institutions have deep roots in rural India and have evolved, or let's say taken FPO as a program beyond what they used to do earlier, they had the capacity to manage these challenges, these contradictions, and handle it. But as we go into other institutions trying to promote FPOs and then take professionals on contract to do these things, whether they would still have the capability to handle these dynamics is an issue that continues to be resolved. Second is in terms of participation in the business of an FPO. The smaller farmers feel that what they have as marginal or marketable surplus is very negligible, and therefore, to an extent, have psychological barriers also in participating, in coming forward, and doing business with an FPO. And these also, I think, promoting institutions who are sensitive to these matters make a special effort to reach out to them. So that is where I think it's a very varied experience, but it has to be built into the design and will not happen on its own without consciously being worked upon.
Okay. Thank you, Marreji. I think meaning the difficulty of making FPOs, FPCs work more substantially in terms of inclusion, and you are very apt and profound insight. The first right of refusal of the existing social structure, there is a pecking order of how you would want to include. If it is a community-driven structure that you are preparing on the ground, the kind of work that's required, and the fact that, yeah, if women are there, they become naturally more inclusive. They do not have too many of these hang-ups. I'll get through to you in a second round. There are questions that are addressed to you in the chat box as well. I'll get to you. I turn to Deepali ji now. With her very wide-ranging experience at the helm of affairs in Reserve Bank, I thought she will be able to give an overarching view after having listened to the conversation so far. Deepali ji, some of the things that happen from a policy and a strategy direction in inclusion in the country. If you look at the self-help groups or the microfinance clients, they are not counted as part of financial inclusion in the RBI's numbers. Should this continue to be so? Because some of the inclusion they make is a higher order inclusion, because credit is not prioritized in what the government and RBI count. It's more access to a savings account and a payment system service. And also the demand side of things when it comes to consumer protection of people who are involved as participants in this, especially women. Are there any thoughts? So I now leave the floor open to you, Deepali.
Thank you. Thank you very much, Mr. Srinivasan. It's a great pleasure to be among old friends. I will come to your question last, or would you like me to first explain why the RBI does not treat microfinances? It is erroneous to say that RBI does not treat it as part of financial inclusion. It is a very important part of financial inclusion. However, you are correct that in the numbers it is not counted. Why is it not counted in the numbers? Because the number of zero balance bank accounts opened is the definition which qualifies for financial inclusion. However, this is to say that the RBI now seriously recognizes how very important this movement is. And after the Maligram committee with which we were all associated, yes, you know that we are also looking at regulation of microfinance. So microfinance, to come back to our subject, is a gendered movement. So we have all spoken of feminization of credit, translating into wellness and well-being of entire families, greater individual and household level empowerment, spilling over into community level empowerment. And this meshes in with the subject given to me, financial inclusion, gender equality, and collectives. So this means a more active role of producer cooperatives, institutions which help to harness meager resources, increase productivity, reduce intergenerational poverty. So women grow more confident and knowledgeable about their rights. SHGs, JLGs, collectives, they are all a rural value chain. But to really explore the relationship between empowerment and membership of self-help groups escalating to community organizations, we will have to look at its various dimensions. Of course, there's psychological empowerment. We say that we are facilitating the disempowered to create a sense of identity, self-value, confidence. We talk of SC, ST women coming to the fore because they are availing of credit. Okay. This gives them, we say, voice, mobility, agency. We also say that the role of the lender, but you see, it all depends again on the role of the lender of the group. Because if the lender of the group chooses to concentrate all power in her hands and continuous capacity building is not there, if the group members cannot interact with the bank officials or the NABARD officials or other people, then they are where they are. So access to information and resources that enable women to take action also becomes very important, and who controls this access. So financial empowerment definitely does reduce dependence on money lenders. It dismantles traditional structures of power, or so we believe. But empowerment, we say, yes, we go from darkness to light, etc. And we empower women to take collective action to transform unequal power structures. But I have my doubts. Why has this not happened? As you know, I have been with the sector for the last 4 decades. And most of my work in the RBI, the work which I'm really known for, is more microfinance. So I do not feel that existing power relations have changed. I also feel that much greater attention is required in terms of both policy design and its implementation, because design, as you know, Srinivasan, we've both been in this game for a long time. Policy design is excellent, but unless it is seen in praxis or implemented to ensure more enabling conditions are in place, then and then only can women fulfill their development and poverty alleviation potential. So while we all accept women empowerment is very important, Mamtaji has pointed out, and Chetna also, to the deficiencies of the model, for the need for the digital divide to be bridged. And Rahul, of course, has given a very good beginning. But what is critical in all of this is perhaps what Chetna is doing, which is sustainable, scalable income generation opportunities, for which producer cooperatives hold larger promise, as infrequent and small microfinance loans are used to cover mostly basic household consumption and exigent medical needs. So for greater democratic and community decision making, consistent support and context appropriate capacity building is required, so that women can better access income generating opportunities. And we've seen this happen, particularly in Andhra. I'm closely associated with both Velugu and what was done for the marketing opportunity in Davakra and what is being done in Mandeshi and in Seva. This is all good. But more of this is required, because we have to ensure also that expectations are in line with resources and capacity constraints. So basically, what I want you to really appreciate, all of you, is that women have a triple burden. Everybody says there's a double burden of being poor and being women. I say there's a triple burden. Women are firstly productive, secondly reproductive, and thirdly they are engaging in community labor. So it's not just a double burden. In this context, it is important to examine whether initiatives to promote women involvement in services delivery and monitoring are underpinned by a commitment to a more inclusive and effective service provision, or are instead sort of substituting for underserved public services. Okay. So this is my first point. My second point is the unmet challenges of empowerment. And I'm not just talking of political empowerment. Mobilizing women to be more frugal and better managers of household resources they don't have the information. There are government schemes, but women are not, they don't have the capacity building, hand holding. So therefore, they only turn to microfinance institutions. Will microfinance institutions also enable them to access and avail government services? Then useful changes for implementation of broad development and poverty alleviation initiatives. Microfinance is a useful channel for this. But democratic deepening in the form of challenge to existing structure, that is even of the group leader, remains unaddressed. The primary focus seems to be to make funds available to the unserved and underserved poor at an affordable cost. Very good, very laudable. However, what is the post disbursement client supervision? What is the actual engendering of the project? Is anybody looking at this? Then there is this co-lending model, which also has been now put forward by the RBI, where the banks are permitted to lend with all registered NBFCs, including the HFCs, based on a prior agreement. What is really happening is that the costs which are incurred by the microfinance institutions are also appreciated by the RBI. Because therefore they say it is easier for the bank to identify the borrower, and therefore you can co-lend. But in everything, the important thing is to not throw the baby out with the bathwater, as happened in the Andhra crisis. So it is essential that the board is updated at least on a quarterly basis of the revenue which is earned, with a breakup of interest and services, fees, etc., in order to evaluate the business model. And to recognize that the business model, there is a business model, there has to be one, there has to be revenue generation. But this is also very important. This is a kind of post-credit dispersal. And yes, everybody appreciates that there is a very high operational cost, that loan administration is difficult, that working with the poor is very difficult. And now I'd like to end with where we began. And I'd like to end by saying that RBI has indeed accepted the criticality of microfinance for financial inclusion. And this is something which all central banks and all banks across the world are concerned, because nobody can afford an unequal world anymore. That's all.
Thank you, Deepalji. I think we clarified now. RBI only does not count the numbers, but its operational processes, regulatory and development initiative, they encompass the entire sector. Also, the role of lender in this entire thing, how deeply involved they are in addressing gender issues, and the empowerment has still not, the processes have not dealt with power relations adequately even now. And the need for a comprehensive approach, not just giving a loan, look at producing livelihood incomes and securing livelihoods of women. A whole range of things from your deep experience we're able to reflect on. I would like to turn to Chetna ji now. There is a question to her from Mr. Machado. Look, you are talking about financial integration more than financial inclusion. So can you take about a minute and a half, because they're rapid fire round, because we have got about 12, 13 minutes to conclude the session. Yeah, Chetna ji.
Yeah, sure. So I mean, when I say that from financial inclusion to financial integration, I would like to say, okay, what women are looking at? Those women who want to be integrated in these systems, what are they looking at? Number one, when they start business, there are so many things. It's not just access to capital, right? There are many things, and access to capital is the biggest challenge. But to address that, you have to reduce the pain of the lender also, and make women much more efficient to handle that capital, right? When you're going to individual lending. And how do you bring the confidence in the supply side also for that? So here I would say that there are ways, how do you integrate them, make it visible, what Mamta was saying, and very well Deepali Pant madam have said it, how implementation is very important. So very simple thing. I have a business, I need a Udyam Aadhar. ID as a businesswoman. My ID is I'm a women farmer or something, wife of something, mother of something. No, I am a owner of my business and I have this ID. So that is one. The second, here when I say that I have my own way of assessing my credit rating system, credit rating tool. I would say that I know what is my, how would I say that? Credit rating agencies are talking about the experience of repayment. We are not talking about my cash flow. So here I would just add that it is so important that they have a digital trajectory, right? Now I would respect due respect to Mamta ji, but on the demand side, women are saying we want smartphones. You know, that is there. And how do we understand that? And how do we see that they get that opportunity? Right? So we have like loan first. Very well, Mr. Mure, you made it a very genuine thing of right to refusal. So this is a situation. But if we have like as best farmer producer company operated by women, not only just that, but role model in the business sector of the women who are doing very small business grew up, then these things will come out. But I am keeping the time in my mind and I'm saying that what are the things which are needed? Best director, women director in the cooperative, best promoter, chairperson in the cooperatives. These are the things. But when I say integration, I mean is integration in the macro economy, right? And I totally agree that microcredit is not financial inclusion because it has given access and it has said that women can repay the loan. Women are bankable, right? That is, yes, they have achieved it. But if you want to integrate, make sure that, you know, they are into every system, IDs, taxpayers, they are ready to get the GST numbers. It's not that. In marketing system, in e-commerce, if they come on e-commerce, then the lender will feel comfortable. If lender knows that what is the sales of these women. So anyway, what all these I'm talking when I'm saying Mandeshi with Mavin and other organization is bringing these women on the digital platform, and so people like SIDBI can also see, and we are talking about the public good digital platform which allows the gender to become into the main integration. So that is the whole thing, and I would just say that it's not access, it's control on finance. Women are not looking at access as somebody mentioned that they are thinking in the presentation about the wealth creation. And I would end with these that, you know, once you come to those level, then you talk about the ownership of property, ownership of farm.
Yeah.
And these are, yeah.
Yeah, thank you, Chetan, so much for a fairly good exposition of what this integration all about. Mariji, there is another question from Mr. John Morris. Says now that these 10,000 FPOs are all coming up, should we not logically link them up with the microfinance institutions for services so that the women centricity of the microfinance movement also influences these FPOs? Can you make it fairly brief? Yeah, got about 10 minutes left now.
So I think the idea floating around is can FPOs be vehicles for credit to farmers who are unserved by the formal system? And that seems to be a pretty dangerous route to take in my view, because these are not financial institutions, they're not well capitalized, and they don't have the systems and processes to do it. So probably expecting that to happen is a little risky. But on the other hand, trying to integrate agricultural produce and to do collective marketing is something that can be explored quite well on the FPO side. So that's my personal views on this.
Thank you. Mamtaji, I will just, turn to you briefly. The kind of load that is on all existing and new programs that come in, to make it somewhat, more inclusive, we allot some space for women in that, like the just preceding question. You think that's a very valid approach? Or we should have a very clearly differentiated affirmative strategy, like the way Chetnaji was just talking about. So what are your views on this? A brief 1 minute answer.
I think you need to do both. There will be partners who will be ready for affirmative, very strong, very focused implementation approach, and there will be others whose capacity, whose learning needs to be built up. So when you're talking about, we talked about policy design, we talked about, but there's another group which is investors, their appetite, their approach to focus more on these kind of projects, to test, to innovate, the new products that some of the companies may want to test out. You need that backing, you need somebody to cover that risk. So with them, the approach would be more differential. And I think more and more working using the tech-enabled platforms, aggregators, Chetna ji gave some examples. I've seen some who are connecting some of these women to the market, some of the men products. So, you need probably a different approach there. So it really does, but yes, as an institution to have a very clear mandate that yes, we need to support it. And again, we look at women as one group, but women come with so many different layers, with so many different backgrounds. So, who are you? I come back to the same point. Who are we leaving behind? Who are we including? Who is this? So that kind of differentiation also needs to be done. So yeah, I don't know whether that answer is, but we need a combination of both approaches, and we need a sustained advocacy for this. That's a role that, because we've been having a lot of conversation, but we really need to capture some of the experiences, some of the best, how it is done, how it can be done. So it's not very complex or very difficult, but yeah. So that's it for me. Thank you.
Yeah. So thank you, Mamtaji. Deepaliji, I will turn to you now. You talked specifically about there is a good policy design, but somehow the implementation doesn't measure up in terms of doing things, and also the enabling conditions around the space where we try to implement. Do you have any thoughts on, as part of policy design, one should go the extra mile and talk about the implementation issues as well and give an implementation design? Do you think that's a fair thought? About a minute you can take on this.
Mr. Srinivasan, absolutely. My view is that, you see, there's this old English proverb, the toad beneath the harrow knows just how deep each point goes. So unless we go and talk to the groups and try to understand that, look, this is what we're trying to do for you, how far do you think we will be successful? And as like Chetna, I'll also give you an example. I once went and spoke to some women as to why they were not going to a bank to avail of credit, which was so available to them. And they said that they brought a stone, and they said the bank is like a stone and it will not change anything for me. Its rules will remain its rules. And then they brought some Congress grass, as it used to be called, some grass, and they said, and this was in rural Andhra. They said the money lender is like this grass. He will always have a grip on me. And then they brought a flower, and they said our society is like a flower. And the more we put water to it and we put manure to it, it grows. So that sense of community empowerment, that sense of things, I don't want things the women say to be done for me. I want you to ask me what I need and tell me what you have, and then we can mesh the two together and go forward. So if policy is to succeed and not remain in lovely papers which we write, it's very important that we look at the actual experience of the rural areas, and we also understand that all of India is not one. It is a country of subcontinental proportions.
Sure.
What the Velugu program may work very well in Andhra, but it may not at all work in Punjab. So why? What is the problem? So we have to understand each particular facet of these things, and policy making per se will not help. I mean, it's the policy implementation, the feedback loop which we need. So this is my take on it.
So thank you, Deepaliji. I think in Malegaon, to some extent, this was traversed. It was not just about policy guideline, but also like code of conduct and operational issues, and how you look at problems of multiple lending. I think maybe that's one of the examples to look forward to as we translate design to implementation, how closer to the ground, being aware of the context. Ajmalji, I now turn to you.
On Malegaon, the only reason why we succeeded was because we talked to all the practitioners in the field in Andhra.
Absolutely. I totally agree with that. The sector was totally consulted, and that's how it came into a good set of instruction. Ajmalji, now I turn to you. When we bring women into, say, specialized institutions, whether it is cooperatives, say women-led FPOs, or even say the kind of cooperative that you also form and bring them in, does it curtail access to the mainstream finance otherwise? Meaning it is inclusion only in one specific set, and they are unable to get out of that, they cannot walk into. Or the point that both Chetnaji and Dipaliji in a way made, there is an empowerment process that takes place when people get out together, bond, they get external inputs. Because of that, their own confidence and ability to move out elsewhere for access improves. How do you see that?
And that is a very important question. And if we cannot link, if the cooperative is not linked with the macro finance and what is going on in monetary system, if it is not integrated there, if it is stopped in the way, then the story will end some day or the other. So it is very important. So it is important for the RBI to recognize, as rightly stressed here by Dipali ma'am and all, we should give the recognition to the community. Community means in a geography, who are living, they formed a community. In what Raghuram Rajan is arguing now, in market and state, all right, but give a strength to the community building so that two-way link to the market and market link to the community link to the government, and government link to the community. This whole triangle should interact simultaneously in both ways. So that was a moot question, but it has to be resolved at the policy level. It has to be resolved at policy level.
Okay. So now I think we come to almost the end of the, what do you call, session. I will try to just have a few concluding comments. One a distinct, what do you call, learning is, yes, the supply side has really done pretty well in what it has done so far to bring such a large number of women. And many parts of the supply side, it was not a public policy initiative. It was not subsidized. It was not funded, especially the microfinance, the cooperatives, all that. The parts of the SAG was led by public policy, whether it is NABARD, subsequently NRLM. But overall, women inclusion in formal financial services has tremendously improved. And the policy side, there has been quite a lot of attention, whether it is the government of India, the states, or the RBI, and even institutions like SIDBI and NABARD. Of course, the supply probably was having an overwhelming influence on what was getting done. So there are some obvious gaps and flaws, because there is a limit to thinking how much I can sit as one person, a set of 20 people, 40 people, and think about maybe 75 billion women in the country. That's the point that has been made by all the panelists. Where is the customer's, what do you call, consultation? Where is the kind of response that we produce from them as to what fits? So we have got institutional issues, we have got product issues, we have got process issues. But then the customer somehow adjusts to the infirmities of the supply. They then try and say, okay, you give me a short-term loan, still I will make a long-term investment. All the asset liability mismatch, I will somehow manage. I will do kite flying by borrowing 3 loans, one after the other. Keep servicing, but still my livelihood goes on. If there is a drought, if my entire livelihood is wiped out, but still I have to repay. Otherwise, I become a defaulter in some database of CIBIL or what do you call, Highmark or whatever. So can we look slightly more the points that were made by all the panelists? Looking at livelihoods as the starting point, that is what you are trying to finance. The consumption finance attached to livelihood, which secures the family. From there, we walk backwards to what are the kind of services they require. Lifetime goals, whether it is savings, whether it is insurance, whether it is investments, and again the loan. The wealth management effort that one of the panelists talked about, the type that KGFS is offering. Is it possible? I would guess also some forms where member invests the share capital is qualitatively different from other form where the inclusion is slightly on a different platform. So where the member invests and where there is a very clear profit motive, Mareji has already pointed out, don't overload the vehicle for a purpose for which it was not commissioned. If it was for transporting milk, don't try to transport acid in that tanker. So you try and clarify what is the purpose, why it was done. If something else also gets done in that vehicle, go ahead and do, but don't rejig the original purpose of that. But then have the agenda of how women are brought in as a more involved, customer-led, demand-led kind of a situation. So we have to relook what kind of products we offer, what is the process by which we bring women in, including focus on how to bring women onto the digital financial framework in a much more positive way. Because the financial literacy programs which we are running now, they all have become stale. They do not look at what the financial sector is looking at in terms of its progress in future. The financial literacy programs are still in the past. You have to save regularly, you have to repay your loan regularly. Everybody knows that. There are structures which have come, which have made these lessons redundant. You look at, okay, can you actually become an individual borrower? What will help you most? What is the financial management principle for a business that you run, for an enterprise you run? How do you use your mobile phone more effectively? Meaning, the way we look at bringing women more into financial sector is about investing in what the future of financial sector looks like and how women can take advantage of that in their own right. So graduation is not a term anymore. Women should be given their space individually also, not just in groups, in their own right. I think I have to mute myself because there is the next session that is to follow. So let me thank you all the panelists for excellent, inputs, insights born out of years of experience. And I thank each one of you. And I thank Sa-Dhan a little bit less because they should have given us maybe another about 15 minutes time. Thank you all.
Right. Thank you, Mr. N. Srinivasan. I know but in the paucity of time, we do have to finish the session here. I'd like to thank each one of you for joining us here this afternoon and sharing with us your thoughts. And once again, I'll request Dr. P. Satish to please come in and on behalf of all of us here at Sa-Dhan, extend our heartiest gratitude and a formal thank you to all.
Yeah, thank you. Thank you, Srinivasan, for wonderful and very effective moderation as usual. Is your hallmark of your moderation, and I do agree that we could have had a little more time, but we also have to.
Yeah,
it's like what we can in Telugu we say Vindu Bhojanam, that for the marriage platter we have to have so many dishes as a part of that. So we can't avoid other themes. Well, thanking you, I also thank Rahul Bist for his lead presentation, which set the tone for our discussions. Then Chetna Galasina and Arshad Azmal, who are practitioners and from the field, brought in their perspective. Then Emmanuel Murray, though he is from a funder, but he has a broader insights and experiences, and points made were very relevant. And Madam Mamta Kohli, she is from a donor agency, but has a broader idea about the sector and the gender and the related issues. Then, of course, Dr. Deepali Pant Joshi, former regulator, but now deeply involved with the microfinance sector. She is also our board member of Sa-Dhan and all, and gets in a lot of insights. So once again, I thank you, all of you. And within the short period, I think we have been able to make meaningful points on these larger issue. Thank you, one and all.
Well, thank you. And with that, we'll now proceed to our next session. Thank you once again. For all of our audiences, I'd like to tell you that we now have a presentation on leveraging mobile tech for customer-centric financial inclusion and digital transformation by Ms. Sonali Mehta Rao, who is the co-founder and the chief growth officer at Aawaz.de. And I'm now going to request Ms. Sonali Mehta to please come in and start her presentation. Thank you. Ms. Sonali Mehta, are you there? Could you please turn on your camera? Ms. Sonali Mehta, are you there? Can you hear us? We're ready. You may proceed. Hello?
Yes, I can hear you.
Yeah.
Are we all set?
Yes, of course. You may start.
Great. So good afternoon, everyone. I'm Sonali. I'm the co-founder and chief growth officer at Awazde. For those of you who don't already know us, we are a fintech company dedicated to furthering customer-centric financial inclusion at scale. It's a pleasure to be here today. Very grateful to the entire Sa-Dhan team for putting this on. It was wonderful to participate yesterday. A lot of great learnings, wonderful opportunity to look at some of the most pressing challenges as well as exciting opportunities facing us today. So I'll just start us off. The Sa-Dhan team had requested me to share a few of Awazde's learnings from the last several years of building customer-centric mobile technology solutions. And then I'm, of course, looking forward to an insightful discussion today with the experts on the panel as well as in the audience. We can go to the next slide. So at Awazde, we strongly believe that sustainable industry growth and health is largely driven by how well financial institutions understand and connect with their last mile customers. Of course, that's easier said than done, as we all know. And some of the barriers here today on the slide are language, literacy, connectivity. I'm sure many of you have direct experience with those barriers in establishing that direct connect with your customers. On a positive note, on the connectivity front, mobile internet penetration has been growing rapidly. It stands at about 30% in rural India today and is projected to triple to 900 million users in just the next few years by 2025. And I think that presents us with an unprecedented opportunity to accelerate digital transformation in service of financial inclusion in this country. At the same time, it's very important to take note of the fact that we are largely looking at and will be looking at in the next few years a very heterogeneous audience. And what do I mean by that is that in the rural context, we're not just looking at internet access or device access, but also usage patterns. And those are very diverse. And so that will necessitate very carefully designed technology and also technology that's designed in such a way that it can be seamlessly integrated into the existing people-driven business operations that are there today. We can move to the next slide. And I'm sure, of course, you're all well aware of the operational challenges that we face, especially post-pandemic. It's been a real challenge, and I must say the industry has been very resilient. It's been a big challenge, though, to kind of look at collections efficiency dropping and then bringing it back up. It's been challenging to also keep OpEx under control at the same time and mitigate the risks that come along with this people and currently cash-dependent model. At the same time, I think that leveraging technology, what we've seen is that there is tremendous potential today to build a bridge from the financial institution to the last mile customer directly. And that's what we've been doing for the last several years. We've been working with a number of the innovative leaders in this industry. And we're now at a stage where enabling our partners to actually reach directly via mobile phone between 8 and 10 million unique customers pan-India every single month with multiple touch points. And what we've seen with our experience is that this direct customer connect is a win-win. So Not only does it empower customers with timely, personalized information that they need to make informed decisions, it also has helped our partners to boost growth, boost collections, cut OpEx, and of course, make more data-driven decisions. We are a company built on over a decade of research, spun out of Stanford Research of my co-founder and CEO, Dr. Neil Patel. And so we've taken great care to measure our results along the way. To give you a couple of examples, working with a large small finance bank, we were able to drive up on-time repayment by 36%. Also with one of the largest NBFCs in the country, their rural portfolio, we saw that customer contactability shot up by 30% after using our platform. To give you an example, we have many different use cases. I won't get into detail, but one of the use cases, which I think will be informative for our discussion later on, is payment confirmations. That one is crucial not only for encouraging on-time repayment through positive reinforcement, but also putting a control or a check around that transaction, bringing transparency to the transaction. So if the customer and the field officer both know that the customer is going to be receiving a timely receipt in a language directly via her mobile phone, in a language she understands, in a way she can access, voice, that is really powerful disincentive for any kind of fraud that might otherwise occur. And I look forward to just discussing how that's relevant to digital transactions as well with my co-panelists. It's also interactive, so it's very important for technology to be interactive so that we can hear back from the customer. If there's any discrepancy or any issue, in our case, we allow her to give a touch tone response that goes straight up to the head office, and then they can deal with it accordingly. I think looking ahead, this direct customer connect via mobile is going to be really critical to digital transformation, not only to driving adoption and enabling digital transactions themselves, which is of course very important, but also to prevent fraud and to build customer trust, which is crucial. As we see mobile and internet penetration increasing so rapidly, there will be many new opportunities for us to build on this current foundation that we've established, and we're already planning ahead, doing the R&D work for that currently. Next slide. So I thought we'd end here with the customer. I'm a strong proponent, and the entire OSDE team is a proponent of human-centered technology design. So I wanted to close the presentation and transition to the panel today by bringing us all back to the customer, who at the end of the day, we are all here to serve directly or indirectly. This, of course, is just one example out of countless ones that I and my team have personally met along the way. I would say that, of course, we've designed our technology first and foremost for our partners, for our institutions and their teams. But very importantly, we have also listened very, very closely to the voices and the needs of their customers. And I think without that, we could not have been successful. So I think with that, I would just say that we've just scratched the surface in terms of what is possible. There's a lot of change in the industry. Very excited to talk to my co-panelists, looking forward to learning from all of you and exploring new opportunities to successfully implement transformative technology innovations in the industry. And with that, I'll hand it back over to the Sa-Dhan team.
Well, thank you. Thank you once again, Sonali, for your presentation. And with that, we will proceed to our next session now, which is session 6 on technology for clients, fintech in microfinance, the era of tech. That's what we're going to be elaborating on. And to moderate the session, we have with us Ms. Saloni Shukla, who is Deputy Banking Editor at the Economic Times. And also joining us as our panelists, we have Mr. Vivek Tiwari, MD and CEO at Satya Micro Capital Limited. Ms. Sonali Mehta Rao, once again, is going to be speaking to us and sharing with us her thoughts during this panel discussion. Ms. Deepti George, Deputy Executive Director and Head of Strategy at Dwar Research will also be here. Ms. Prerna Saxena, Senior Digital Payments Expert, Better Than Cash Alliance at the UNCDF. And last but not the least, Mr. Pratyush Hallan, CEO at Tapits Technology Private Limited, or FinPay as it's more popularly called, will also be sharing with us his thoughts. So without wasting any time, I am going to hand it over to you, Saloni. And a quick reminder for all of our audiences here, if you have any questions, we have a question and answer tab at the bottom of the screen, as you may see, and feel free to just put in your questions there for our panelists, and I'm sure the session moderator will be able to take it up as if we have time. Thank you. Over to you.
Samriddhi. It's a great day to chat with all of you here today, and the buzzword obviously is digitization. Everybody has been talking especially about this topic. Just to give you a brief background on where we start here, you know, in the last 1 year, we have seen a host of changes in the way business has been conducted in the last 1.5 years since the pandemic started. And what we are trying to get and learn from our panelists is that how they have changed the way they do business, and you know, with the emergence of fintech, what sort of challenge they are seeing, and what sort of competition that they are seeing. Is it more about collaboration, or they fear the emergence of fintech? So let's just dive right in. Sonali, I was listening to your presentation here. You know, just give us a sense, you know, in the last 1.5 years, how do you see the whole paradigm have changed? Now fintechs like yours are entering the entire MFI space. What has changed? Do you feel that the customers are more aware of fintech? How are you really you know, trying to penetrate this space?
Thanks, Saloni. So I would say, of course, there are fintech companies like myself that have been working for many years in this sector. And I think the way that we look at it, and I know Pratish also from FinPay, I've, you know, followed his work over the years, is really to look at the institutions as true partners. And so from that perspective, I would say that, you know, we've had very collaborative relationships. Our focus has been, you know, it's around aligning benefits and incentives, as I mentioned, right? So at least from our perspective, we have a, you know, it's a B2B model. So we want to first and foremost serve our clients and make sure that we are able to help them take their businesses to new heights. At the same time, they won't be able to do that if they're not, you know, really able to listen to their customers and get the data back from their customers and implement technology that enables more efficiencies in their businesses. So that's the way I see it. I see the institutions really as partners. And I think the customer, of course, is the customer of the institution. And we see ourselves as enablers.
Thanks for that. Vivek, let me come to you, and you know, the question is on the same lines. How has business changed over the last 1.5 years? How is your organization adapting to the vastly changing digital paradigm that we are seeing? Everybody is grappling with it. And, you know, we saw this with banks a couple of years ago, where they were, you know, giving one offering after another to banks. So is this something that the MFI industry is going right now too? What is your sense?
Thank you so much, Saloni. Definitely, last 1.5 years were quite challenging. And for the microfinance sector, I think for majority of the players, it was the force of digitization was there. We were not having too much options but to be digitize our processes. And the biggest challenge was to digitize our collections. But in last 4-5 years, the way the JAM Trinity was working, and especially on the rural India, it was quite useful. At Satya, luckily we are young age MFI and invested too much in the technology from day one. And from day one, our approach was that we are not a technology company. In terms of developments, our focus would be, we don't want to waste our time in terms of developing something in-house. Our approach is always whatever is available in the market, what is best suited for the rural India, we should go and adopt it, we should try, pilot it. And if some customization is required, we can train our vendors or train technology partners and they will do it and it will be rolled out. So that is quite working. in our process, system, controls, governance, because we invested a lot before our birth was just after demonetization. And from demonetization to pandemic, I think we invested too much in terms of technology. And Satya is, I think, only company where we claim that almost 96% collections are digitized within 1 hour of its collections, are directly through the bank accounts or through the nearest CSP points of the banks, whatever the network was available. So it was quite useful, and digitization is the only way to grow further. The model will be some more touch and technology based. Human touch is differently, that will be the essence of the microfinance always. But automation and technology is going to play a big role. Now the buzzing word is micro fintech, and how the microfinance players are going to evolve themselves gradually, and how they are going to adopt the technology at the company level. That is the first, and how we are going to train our customers gradually on the technology piece, where different type of frauds and risks are there in current scenario. So these may be the challenges, but biggest strength is that the learning approach of the sector. Even the microfinance customers in last 20 years, they have evolved and they have graduated, and it is almost the third generation of the microfinance in India. They are borrowing with the microfinance sector now in last 25 years. So the positive approach is there, ambitions are there, and I'm very much optimistic that the way the last 1.5 years, almost 2 years before, we have never thought that the conferences will be in a virtual mode and we will be sitting at our own boardroom and we'll be attending the conference. So the human races are quite adaptable, and in terms of every challenge, we come out with more opportunities, and definitely the Silicon Valley is working hard, and it is just not for the microfinance sector, it is for the entire races, and things will be more positive. And I'm very much confident that in coming next 5 years, the technology will be the key in almost in our entire day-to-day life.
Thanks, Vivek. Very interesting points there. Deepti and Prerna, before I come to you, let me bring in Pratyush. Pratyush, just picking in from Vivek, fintechs basically in the entire paradigm, are being seen as, first they were seen as challengers, now collaborators. In the last 1.5 years, how are you seeing this change, obviously for FinPay and your customers as well?
Yeah, hi Sonali. Can you repeat the last? Somehow I could not hear that. Yeah.
Yeah. Am I audible to you?
Yeah.
I was saying that, earlier fintechs were largely seen as challengers. Now the sense is that they are collaborators. How are you seeing business change for you as well? And in the last 1.5 years, about customer adoption, are you able to, get customers on board? Because obviously there are large incumbent MFI players in that segment who have, a vast network. So how is business working there?
Okay, so in my view, since inception, since stop, it was more of a collaboration and not as a competition. I'll tell you why. Because everybody has to play by their strength, and nobody can do it all. That okay, I can do everything below and above and beyond it. So core strength of different like banks is different, for MFIs is different. Banks can lend to other sort of customers where MFIs can't lend. MFIs can lend to another sort of customers. Fintech can help in digitization and making operational more smooth, scalable for MFIs, and less costly, maybe somehow cheaper for them, the operations part. So everybody has their own strength, and I think if everybody plays by their strength, it becomes a win-win for the entire industry, because everybody then grows together and make an impact to the entire ecosystem. So that's what we have believed in since inception, and I think for us it has been a good journey, while we learned that how these industries working and how we can help solving their challenges. So while we met MFI Satya, of course Vivek sir, they were our first partners, and we visited them and understood, and the major thing, the main thing for an MFI or main challenge is collections. That's the core also of any lending company, ki collections kaise kare. So that collections piece, we thought let's solve that if it's that's challenging, and we were like the first one to convert their large chunk of cash into digital with Aadhaar Pay and then UPI, and then lately we started cash management. So and it was extremely good support of, and that also helped because the mindset of even Satya and few other MFIs were to move toward digitization. So that helped us and escalated us in our journey. And then COVID and Demon, of course, they helped us out there. And how Sonali said, or how Vivek sir said. So I think it's more of collaboration, and I think with collaboration, both these organizations grows humongously. But as if it would have been a competing thing, then none of us has been able to grow. And yeah, that's what I think.
Okay, thank you, Pratish. Aditi, can I come into you now? A lot has been spoken about, how collections have been digitized, how rural customers, MFI customers are increasingly, becoming digitally savvy and advanced. What does your, sense show in terms of how you're tracking the industry? At one point of time last year, and even actually in the period of April, when collections had to be completely stopped, when collection agents, were infected with COVID, and sadly, a lot of them lost their lives, and MFI institutions and several banks and NBFCs took a call to stop collections at that point of time. How do you see this space has really evolved, especially in the last 1.5 years?
Thanks, Saloni, and thank you, Sa-Dhan, for having me. Yeah, so I think that's a very pertinent question that's getting discussed today. I mean, certainly induced by the pandemic, but also even before that, there's been this distinct trend towards the incoming fintechs trying to fix specific operational requirements in microfinance, and microfinance is only a part of the larger ecosystem of financial services providers. So all the way from, say, KYC validation to just integrating bureau checks through APIs, so that you can bring down the TAT considerably. Collections, of course, is the massive, I think, win. And then, but then the lesser talked themes such as risk management, right? How do you monitor credit risk, that is, and then what are the kind of dashboards that you have? How can you have real-time credit monitoring? And then the role of messaging. So I know Avaz is going to talk more about that. But maybe if I could, because at Dwara Research, we certainly look at the regulatory developments and how that space has evolved. And I think it's important to maybe just spend a minute on just payments itself, where we know that the payments infrastructure in some sense is enabling collections, right? And we are talking of non-card, non-physical, non-cash forms of collections, and then and really, I think adoption has been accelerated because of the pandemic and the lockdown. But this has also been accompanied by a rise in failure rates, not necessarily because of the pandemic itself, but it's just that it unraveled quite a bit, right, during the pandemic. And this we could establish, particularly for UPI and APS. UPI failure rates are between 0.1 to 5.5% or so across the top 30 banks as of July 2021, and we are talking of 3.3 billion UPI transactions that have been enabled, right, in July itself. And so I think these numbers are staggering, and we should kind of keep that in mind when we think of even if it's just a 1.5 or 5%. What does that mean? For the consumer segment, or for consumers itself, right, who are trying to shift to digital payments, and the manner in which solutions are available, redress is available. Again, in APS, I think beginning of the pandemic, April 2020, we looked at, I think about 3 institutions had shared their data on APS enabled transactions. Even there, and of course, this is April 2020, a year back, and there we had about 39% failure rates, which is very high on an average. And then the top kind of 3 reasons for that were things like biometric mismatch, transaction timeouts, or insufficient funds in the account of the consumer. So, so we have to be that there are also a lot of these infrastructural bottlenecks. Again, other studies have highlighted, such as one by the Good Business Lab. I won't get into the details, but there again, people who had smartphones still, they found that they did not meet certain infrastructural requirements, because of which, even if they were trained to do transactions on smartphones, they were unable to. So I think I just want to kind of say that, okay, we need to have a really good sense of what's the spread of payments infrastructure across the country, and are we able to track that on a frequent basis to know which parts need additional attention, etc. And I think that's really the backbone for a whole amount of kind of digitization, of course, but also fintech activity, right? So let me just stop there. I hope that was useful.
Maybe I just want to ask a follow up on that. So, what the point that you're coming at is that, while we have reached a certain point where, we are trying, we have grown leaps and bounds in terms of payments for sure, with the way UPI has grown in the last 1 year. But obviously, there have to be a lot of things served on the plate for, for example, say failure rates to come down or customers to become more savvy. Is that what you're trying to point out here?
Yeah, I wouldn't put it all on customers needing to become savvy, because they are savvy. I mean, the way that they have shifted has been tremendously, quite amazing. So I think what I'm saying is that we need to kind of, keep in mind supply side constraints. And when I talk of supply, I'm talking of infrastructure itself. So for example, there is a high sort of regional disparity in access point density, right? So we are talking of access points such as POS machines, micro ATMs, banking outlets, uh, and I think that's about it. Yeah, I think that covers. ATMs haven't been functional, and of course, when there are sort of personal data breaches of financial frauds, etc., what is the grievance, right? So, I think that is the larger kind of issue around the quality of payments infrastructure across the length and breadth of the country that we need to track on a good basis, and from there we know, okay, while we know that numbers are increasing exponentially, can we back it up to say that what is the quality of that exponential growth, right? Yeah, that's.
Yeah, let me pick that point, and Prerna, let me come to you. The sense that a lot of metro customers have, unless and until they venture into the deeper pockets of this country, is that the rural folk is not savvy to do digital transactions. That's the sense that you come across, and that's actually a stereotype, because everything is being done on the smartphone today, and the rural folk, I mean, like Deepti pointed out, if you don't have failure rates of a 5% magnitude, they will increasingly adopt to these segments. What's your sense? What has been your experience? And if you could enlighten, because the way a lot of these payment operators have ventured into the far corners of this country, in every pin code for that matter, shows that our rural folk is really, really ready to adapt digital.
Yes, thank you, Saloni, and thanks, Sa-Dhan, for bringing us all together. I'm so happy to be coming in after Deepti because she touched on some of the very relevant points from the customer perspective. And to pick on the question specifically that you asked, Saloni, definitely the rural folks are no way behind in being more entrepreneurial or being as much savvy as possible on digital. However, sometimes we do feel that the ownership is on us, on the financial service providers or on the digital service providers, to give them a more equal playing field. And in our work with various civil society organizations and industry stakeholders, and also while working very closely with Ministry of Finance to promote digital payments in the country, what we have seen is that while the rural folks are ready to accept digital payments, we ourselves have yet not been able to provide them a plethora of options in vernacular languages. We are still lacking in providing them timely and satisfactory grievance redressal mechanisms. There have been definitely very high failure rates, as Deepti mentioned. Even for the banking correspondents, the bank sakhis, whom we very heavily rely on spreading digital financial inclusion in the country, they have come forward and expressed the need for revision of their uh, remuneration structure, and also the initial setup cost that they need to incur to be part of the banking system. So there are a lot of initiatives that we as industry stakeholders or financial service providers or regulators need to take to enable the underserved segment to be socially and digitally included in this growth journey that India is going through right now. And I think as we all faced during COVID pandemic, accepting or adopting digital was the basic survival need. Whether you were digitally capable, whether you were digitally aware, you had to do it, no matter where you lived and in which occupation you were. So people have taken it, but yes, there have been some negative experiences as well, and that is why we need to work together to address them. And I will just take a moment to mention here that we at the Better Than Cash Alliance, which is a global alliance, consulted various countries, governments, and stakeholders, and came up with a set of 9 overarching principles, which we call UN Principles for Responsible Digital Payments, which is a very high-level enabling framework to all industry practitioners to understand how they can build a more fair and inclusive digital ecosystem for all consumers, be it rural, urban, low income, high income, but a system which works for all and leaves no one behind. Yeah, I'll
Okay,
stop there.
thank you. Thank you, Prerna. I'll take a leaf out of your book and pose this question to both Sonali and Pratyush. Um, uh, is fintech the answer to this problem? Because, we've MFI is not new in this country. Banks, MFIs, small finance, now MFIs turn small finance banks. A lot of institutions, have been, trying to serve the underserved, so to say, and take banking to various corners of this country. But now fintech, has come in. Uh, are you the answer, or you feel that? And I know you spoke about collaboration, but this, what I'm trying to get here is that, like for example, banking. A lot of times, large payment players, so to say, accuse banks of treating lending as their own domain, and not allowing them to grow. So, is fintech the answer to that? Can you take lendings to, every pin code, every village, every district in this country? Sonali, if I could go with you.
Sure. I would like to kind of go back to what Pratyush said earlier, which I also agree with, is that no one can really do it alone. And I would say even with fintech, no one fintech player alone can be a silver bullet here. I think there is a need for collaboration with the institutions as well. I also want to draw upon a point that Deepthi brought up around one of the barriers that she talked about in terms of cash in options. So while the device penetration is rapidly increasing, as we all know, in rural, customers may be savvy. There may be options for them, but if they don't have a way to get the cash in, if the ATMs are not functioning, if the bank doesn't serve them properly, or there's no branch, that's a big barrier, of course. That's very different between rural and urban. So that barrier is there, and I think that's something where there has to be a collaborative effort around that, and the institutions also have to grow to reach into those last pockets of the country. And then I would say also, just drawing on what Prerna also brought up around vernacular language support, that's something, of course, Awazde is very deeply invested in, and I think many other players, I think that support even other fintech players building into their app. I think it's often overlooked, the importance of that. So I would kind of draw our attention to kind of that, and as well as customer grievance redressal, which is an important point that she brought up. And those are elements where I do think that fintech players can play a big role in helping the institution. But I would say again that it does need to be a collaborative effort. And I really don't see any one fintech player even alone being able to be a solution here. It has to be all of us pulling together.
Okay. Pratyush, just to add, to the earlier question, and I know you spoke about, how it's going to be collaborative. Sorry, I got but in terms of, say, regulatory assistance for that matter, these segments are very, very regulated. So you feel that there has to be some scope or some, sort of regulatory intervention also in terms of, allowing this space to grow further. What's your sense?
So, in terms of regulatory, I think regulator is doing awesome work. We never expected that. The speed which they are moving, it's like a fintech speed. The products which NPCI has been launching continuously, and like Aadhaar-enabled payment systems and micro ATMs, and they are addressing these challenges. And with fintech players like us, we are trying to expand them, scale them, and make them to the last mile reach. So like how some of the panelists mentioned that, okay, ATMs are not working, and that's when they also replaced it with micro ATMs. So however, though RBI forces banks to keep ATMs replenished every time, but if sometimes it's not possible, micro ATM was a solution. And we have been actively doing micro ATMs, and we are present across now 1 lakh locations today. So I think though fintechs have got some solution in terms of vernacular languages, the interfaces which are extremely simple out there. And like also one of the panelists mentioned that the success rate is an issue, but I think the rural people has more patience than urban people. So success rate, I'm still fine. Vivek sir would completely agree that Aadhaar Pay had 60% success rate, and still we were able to get it to a large number of customers. So patience unme bahut zyada hai. I think that is there, and they really want to try these products also. So that's also there, the will to do it. Things which they are afraid of, that's what we need to address even going further, like how Prerna said on the grievance redressal mechanism. So that has to be very well communicated and extremely prompt in terms of solving their queries. Like previously refunds took 7 days, and somehow we brought them to one single working day, and now it needs to be brought to a real time that, okay, transaction failed, the refund is immediate in the bank account. So that would help them increase the trust. And in these, I think regulator has been pushing us. They are having fintechs like us in their steering committee meeting. So we are a part of steering committee of NPCI, and they always had banks as a member, but recently they started having fintechs, and 2-3 fintechs they selected to be part of that. So I think they are also evolving, because they know on the ground these fintechs are would give us exactly what's happening, and that's how then we can improve our systems and processes, and bring out new regulations around it. So I think I really like, because I never expected that regulators would move such fast, but they are moving fast like fintechs. And I think the difference is also there. If you see the rise in the volumes of UPI, Aadhaar-based payments, and digital collections, it's constantly growing, and it shall continue to grow. So I have a very positive feedback about it. Of course, there is a lot to be done, but the scale which we are moving is really fast. And
What
it's
is
good.
that? What more needs to be done?
Like I said, the grievance redressal or real-time refunds, or and plus more security around it. Because one thing which we have seen among these customers, that they are afraid that, because many of them have smartphones, but on their smartphones they have apps like YouTube, TikTok, Facebook, but not a banking app. Because they are afraid that, okay, in the banking app somebody might take their money, or that's where they are afraid. So that trust needs to be built, and how that trust will be built is that their money never gets stuck, they get an instant refund, they are the transfers are more secure with multi-factor authentications, etc. So those things needs to be done more to bring that trust among them, so that even these merchants, these customers, they can move towards from assisted to a self. So like for collections, currently like in MFIs, they need to every time send someone. Rather than that, it happens like a NAC mandate, auto pay, UPI, something on that front. So the costs and everything comes down. And plus those customers, when they pay digitally, they also create a banking history for themselves. So tomorrow when MFIs also mature towards the individual loans and these kinds of things, that would help them underwrite these customers and then start offering these loans. So that's, I think that is more to be done. But yeah.
Pratyush, actually, the trust factor issue could be a trait similar to a lot of metro clients as well, who don't wish to, save a lot of digital information on their mobile phone. Anyway, as a reminder to our participants, in case any of you want to ask our esteemed panelists anything, we'll be open to taking questions in some time. Vivek, now coming to you, just, taking forward from what Pratyush said, regulator, according to Pratyush, has played a very key role. They have allowed a lot of MFI voices also on board on NPCI steering committee, as he mentioned. And also in the initiatives that they take, they are always open to take stakeholder comments for that matter. that is one aspect of it. I would like you to share your experiences and what more could be done on that front. But also on the government front, since the Jam Trinity, the Jandhan, we have increasingly seen that zero balance accounts have come down. A lot of money was also put in during the pandemic in a lot of these accounts, and usability grew. But beyond that, what more has been done? In my conversations with MFI players and banks, I'm aware that the government has been, pushing a lot of credit and payments also to these areas. Presently, how are these initiatives panning out, and according to you, what more needs to be done?
Saloni, in my opinion, two things are very positive. That rural India is open to learn, and even the companies and regulators, we both are quite positive and to support the people at the bottom of pyramid, and even in terms of training, in terms of awareness, and in terms of assisted technology model that can be for next 4-5 years that can be there. 3-4 years before the Supreme Court's intervention, when the all bank accounts were linked with the Aadhaar, I think that was one of the wonderful thing on the ground, and the transactions were very easy, and to track even the customers are very much comfortable. But after that verdict, I think some 30-35% bank accounts they are not linked with the Aadhaar now, and people are facing more challenges in that. How we can restrict that, how we can utilize the opportunities, and on the other side, how we can reduce the threat part of data leakage. That will be that need to be rework on the background. But that linkages of Aadhaar with the bank accounts, and there is no requirement of having too much bank accounts for individual customers in the country. If systems are so easy and technology is so useful, by using just 1 or 2 bank accounts, the history will be created, and more data analytics can be done. And for country like us, the demand is huge. And 4-5 years from today, I think what we are facing today, it will not be tomorrow. What we are having the facilities in urban India, rural is just 5 years behind to that. Means my experience is the same. The ACs were used in the urban India 10 years before. Now almost in the rural India, you are seeing the ACs in the rural India now. Whatever the car you are using in urban India, after 10 years, they are in the rural India. I think the same way technology had its own way, even the technology travel much faster in the rural area. The adaptations are much easier. The new generations are quite good. But from the regulator side, the practical approaches should be there from the ground. There should be, definitely the challenges are there, threats are there, but how the next generation is going to adopt that technology and they are safe and secure, is still the hesitancy is there, technology hesitancy is there, and which type of securities can be provided at different level. I think that is the biggest concern. And government must have to do something in that particular direction, especially on the cyber security front, because everything is moving digital now, and cyber security is the biggest risk in coming years. So with the balancing these two, I think there are huge opportunities, and it is going to cut cost in several ways, and efficiencies will be at a different level in next 3-4 years time. And everyone wants the freedom, and technology gives you that freedom. Means whatever you are doing, you are doing by your own self. Means you are not dependent on anyone, and the time management and relationship management both becomes very easy by using the technology.
Thanks, Vivek. Actually, that was something that I was going to raise with Deepthi now. Deepthi, frauds, with digital, this worry about cyber security, whether organizations are investing enough, whether customers are savvy enough, because time has shown that, fraudsters have sort of one step ahead, with what's happening, and they are more organized. It's almost like a laboratory operation here. So, how much is that a deterrent in the growth of digital?
Yeah, okay. So let me maybe reframe the problem as if we assume that fraud. Okay, so like even let's even try to understand what is fraud, right? So we could have a fraud perpetrated by an employee in the organization, a fraud perpetrated by an external criminal, who are already criminals themselves. Although financial fraud itself is criminal in nature, but we also could have frauds by customers themselves, right? So we'll have to kind of think about, and I think what you described as cybersecurity risks, etc., fall into like the second category, which is non-consumer, non-employee kind of. But risks obviously exist because if you have access being given, by employees, or even if it is accidental or innocuous, to third parties who then don't have adequate systems in place. Particularly with fintechs coming in, we have, the whole, when you look at the chain of, so for example, if you take credit or microcredit, right? Like we are talking of one entity doing that whole kind of product for the customer. The life cycle of the customer is with one entity, but now suddenly you have all of these third parties coming in, somebody doing KYC verification, somebody doing collections, etc., etc. So we have all of that. Now, what does that mean is that the system itself could get opened up to third parties, and therefore there is this fear of cybersecurity, and that's going to be a big one to solve. I mean, with the US huge cybersecurity attacks, etc., everybody's debating whether they need even a separate cybersecurity regulator itself, right? Who's a pan regulator cuts across. So I think those issues are yet to be debated. I mean, we have to solve for that. But I think coming back to yes, with when you think of consumers who are trying to get into digital and then experience fraud incidents, I think the challenge there is to say, and which is where I said, can we reframe the problem as, if we were to bring that down, or if there is adequate redress, I think the chance of just losing the customer early on in their digital adoption journey comes down considerably, right? So and so just to kind of rephrase that, is basically saying that if we have checks and balances on the consumer protection side of things, where when money gets lost, even if it's innocuous, even if it's and when we think about a digital payment, it is tricky, it is difficult to understand who is liable for that loss. Should the bank pay up? Should some third party pay up? Should the MFI pay up? I mean, all of these questions are difficult to, and I think that's the whole question of liability, right? Who should the liability fall on? And I think that's a question that other jurisdictions are grabbing. RBI certainly is thinking about it, and I think by just making sure that there is a solution out there, there is a responsiveness of the solution is there. Even if money gets lost, right? Even in the long term, you can't, or rather, it was a mistake by the customer. When there is a response in place, rather than not having a response, it just adds to the experience for the customer in their digital journey. And so, just having that interface. Now, that interface could be digital, it could be a bot, it could be an actual person answering a phone call, or it could be, some regional language SMS or a pre-recorded IVR, whatever. But I think having that versus not having anything is really going to set us back considerably. Right. And I think that's like when you talk of fraud, I think that's the big, we don't even know whether something is fraud or not. And I think placing the onus on consumers to figure out whether it's a fraudulent activity or whether it's a genuine mistake, or whether she made a mistake, or whether there was a problem with the systems of the provider. I feel like it's not right to replace that burden on the consumer to figure out who made the mistake, but rather that you have a system in place that can deal with that grievance and figure it out. And I agree, it is a difficult problem to solve, but I think there are a lot of great solutions that people are testing on the ground and trying and piloting, and I think learnings from there are going to be just extremely important, also to take back to the regulator. But yeah, I think there's a lot more that needs to be done on that side.
Maybe who should the liability fall on? I know it's a difficult question, but
yeah, are you talking of payments?
Yes.
Yeah, I mean, I suppose I don't have an easy answer for that. There has been, so I think typically how RBI has looked at it is to say, if you are the credit risk holder, so which means you're a bank or an NBFC, that's the entity that the RBI directly regulates. Anybody else that they interact with, so it could be a third party service provider. And we are talking of all of these fintechs as potentially third party service providers because they are not holding risks on their books, right? Then the liability for any loss falls on the bank or the NBFC because they are interacting with others. However, I think there are other jurisdictions where they're also thinking of third-party liability, to say that if you as a third party are the consumer-facing end of the chain, then can we also start thinking about liability there? Because they are first consumer facing, they're retail consumer facing, so they are unsophisticated retail consumers, and if you're facing them, then you have an added liability, whether you are actually a bank or an NBFC, doesn't matter, or whoever you are, third party tech provider, etc. I think there are progressive ideas on that in other jurisdictions, which I think is kind of, we should explore further to see if there's something there to borrow for India. But if you are, so imagine like if you're like a pure tech player, very much in the back end, and then suddenly you're using consumer data. We are talking of retail consumer data. Shouldn't we have some additional checks and balances there? Because the consumer cannot fend for herself. And so then there is a requirement for some kind of a liability structure there. And so, so therefore there is that, and I think in the RBI's latest discussion paper in microfinance, right, there is that distinct shift that that one, and also the NBFC discussion paper on scale-based regulations. I think there is a shift towards activity-based approaches, like particularly for these kinds of activities where there is a consumer interface. And I think that's a great direction to embark on.
Okay, thank you so much. Prerna, let me come to you, and I would like to continue on frauds here. How does organizations and setups like yours help customers move from cash to digital? Because this clearly is a deterrent. If you are if I'm on UPI, and we've seen several of these UPI frauds, if I get affected by it once, I'll be like, oh my God, this is not something I wish to do. So, what are organizations like you're doing?
Sure, Saloni. So organization like ours, while we do not work directly with the end customers, what we do is that we raise awareness and we do advocacy in the industry as such, and we work very closely with governments and industry stakeholders to build awareness about such issues. And some of the points which came up today, and what Deepti was saying just now about having, responsibility across the value chain, having responsibility fixed only on the touch point from where the customer is receiving the service is not enough. We are seeing that we need to have responsibility fixed up for all the players who are part of the value chain in serving the customer. And also from the government side, I think we are seeing some initiatives coming in as a very collaborative effort, like the Ministry of Finance led Interministerial FinTech Committee had uh, reached out to us to get voice from the industry and from the customers as to what more needs to be done to get more people into the digital fold. And we had organized a roundtable consultation where Sa-Dhan was also there, and we had participation from many other organizations, basis which we figured out that there were 10 issues which are still needing to be resolved to help build trust of customers into the digital financial services. And when we talk about trust, and I'm glad you talked about it, Saloni, it is essential to build trust in a very forthcoming way. We do not need to do only what the regulator tells us to do. We need to go a step ahead. We need to be on our own very forthcoming in explaining the pricing policy. We need to be very forthcoming in taking consent from customers on how their data would be used. We need to be very forthcoming in telling them that explaining to them those lengthy terms and conditions which often come in very technical language, and while we are rushing to do the transaction, we just take on them. And because later on when anything goes bad and the trust is broken, we don't go back to zero, we go back to negative, and it takes a much longer journey to bring the customer back onto the digital digital financial services, be it payments or any other service. So we work on these aspects. We have also been working with some of the industry bodies like FICCI to work on promoting digitization of small micro merchants in rural areas, Himalayan regions, where we tend to think that the infrastructure is not adequate and people are not really very well connected, so they are not our target segment. But that is not where we can leave them behind. So these are the kind of collaborative efforts that we try to do, and we We take regular guidance and also we provide technical advisory to various government agencies so that some of these aspects of customer journey, whether it is to be treated fairly or whether it is to be prioritizing women in our design of products and services, or it is to give them an option of products and services. Just giving them one option is not enough. Give them options, explain it to them, and then let them decide what works well for them. So to basically to enable a better standard of consumer protection in the digital world is what we are working towards.
So you believe that, say, if an industry we work together more on grievance redressal, you think that something like this could be sorted? Because if I as a customer face a fraud and my grievance is redressed immediately, or maybe say by a lag of 24 or 48 hours, do you think that is something that will help?
Yes, definitely. As an industry, if we come forward together to address some of these issues, it shows a very good start in strengthening, uh, users' trust in the digital services. And I would really applaud the national helpline which Government of India came up with, which is about reporting cyber frauds. It's a very good way of telling the industry players that government is serious about these issues, and there should be such initiatives by other. Players as well. While there are mandatory guidelines from the regulators, and I would say our Indian regulators are definitely very progressive in these regards, but yes, oftentimes we have seen that sometimes customers don't even know whether their complaints are registered or not, and even if they get to know when they are talking to the grievance redressal officers, they feel intimidated. They feel that they are not at par with them to explain what they want to say. Even people, like you said, the people in the metros also, they feel uncomfortable reaching out to the formal system because there may be certain the mechanism available to reach them or the language used by them is not very very comfortable for everyone or feels very welcoming. So even if we provide information on, okay, your complaint is registered today, and give them a real time progress of how the complaint is moving within the resolution system, then customer can wait for 10 days, 7 days for the resolution. But having no information provided to them is not fair.
So I don't see any questions, meaning it's going very smooth, and all your answers are very self-explanatory, so the audience doesn't wish to ask any questions. So I have last 10 minutes here and last round of questions to all of you. Okay, I think I have, okay, one question here from Anita Raman. How do you think uneducated women customers can be trained to use smartphone apps? And do you reiterate that they attain a level of comfort? Have we tested that on a real-time basis? Vivek, can you take that, please?
I think the microfinance industry, that credibility we have and the trust we have created in last 22 years, and the rapport we have created with our customers, that is the biggest strength for the sector. And for all the grievances, I think they are not going to approach any technology partner or any government authorities. We are held responsible on the ground, and we are responsible for each and every transaction of our customers, and they look towards us. As of now, the rural India is at assisted technology mode, where the assistance is given by the loan officers or someone who are already trained in their families or in their villages. It will take another 2-3 years from here, where the smartphones are effectively being used by the microfinance customers itself. But adaptation is quite fast, and once we are able to create a trust atmosphere between our customers, they are able to follow it. And that's why I was discussing about the cyber security. And if something goes wrong with the customer segment, at least the companies like us, we can help them in getting their money back through different challenges. Except that the adaptations are fast, and in next 3 to 5 years time, I think you can see almost 60% rural India women, they are using the smartphones more frequently, because as of now WhatsApp and Facebook and other apps they are using it now in day-to-day communications. Even illiterate women, they are using mobile phones for the communications. They are able to dial it. 10 years before, the challenge was that whether they will able to identify the numbers of their son or their husband. But these problems are solved. So they are illiterate, but they are having their presence of mind. They are having the learning curve. And for the technology, you don't need any special training. If you have a technological mindset, definitely it is easy to adopt.
Sure. I have last 10 minutes here, so I'm going to quickly ask you to, be concise on your answers. Last question, from my side, and I will pick some panelists who can answer this. A lot has been spoken about the acceptance points and the models which the way delivery of financial products and financial services will happen. We speak about POS becoming history, or cards becoming history, or ATMs becoming history, but all of these services are branches becoming history, but all of these services are there in some form or the other. Going forward, how do you see this industry panning out? We spoke about several of these challenges, but the delivery which will encompass digitization, phygital, basically a lot of people speak about phygital. So how is that going to work? Sonali, if you could take that first.
Sure, and I did want to also touch upon Anita's question, which I think was a really good one. So of course at OASDE, we've been thinking a lot recently about how we can help our partners accelerate adoption of digital transformations. And as a result of that, I've been spending time, my team has been spending time in the field just recently, in fact, kind of observing what are the barriers, what does it look like when a field officer tries to convert a first-time user to digital payments. And I mean, of course, this is something I've actually observed over, almost a decade now working in the sector, is that drawing back to Anita's question, I think it's not just a question of training and even device access. There's also a very important and not so often talked about confidence barrier. And it doesn't matter, uneducated, educated, we're living in a very deeply patriarchal society. And that's even more so oftentimes in rural contexts or certain parts of the country. And so what I see is there's a mindset barrier, which also needs to be overcome, right? So for example, I was in the field a couple of weeks ago, and the woman actually has a smartphone, which said, no, this is not, I can't use this. Just talk to my son, right? And I'm sure many of us have seen that time and time again. And I think there is an opportunity there for an assisted model, as Vivek mentioned correctly, but I think also there's an opportunity to empower women through the right kind of communications and regular touch points of those communications in vernacular language, as we previously discussed. And that's something that we're really excited to work on in the coming years.
Can you comment on that? Deepti, am I audible to you? Can you comment on that?
Yeah, sorry. Yeah. No. So I think I completely agree with Sonali. There are a lot of other barriers which I wouldn't say that the provider needs to solve for it, but these are challenges and these are barriers. Like for example, if I'm illiterate and I have some issue with my phone, I may not have the confidence to call up any customer care by myself. I will still need a male member to do that. And then there are all of these caste related barriers, right? Like, could I walk into a branch by myself and be attended to? I mean, it's just, I mean, there's a lot of research emerging on this, and this is extremely, extremely important for us to think of when we think of this transformation, because otherwise what's going to happen is certain sections of society are going to be left behind, and we don't want, and the whole digital divide will become really a huge economic divide, and that's something that we really need to kind of solve for upfront itself, and it's a multi-stakeholder work, right? Because it requires, there's a cultural evolution there, which is waits to be seen, and it's unraveling itself. So it's good to see that. And there is also the role of early adopters, etc., right? Within a village, who is the early adopter and then who's the influencer? Those things are again supremely important in the way technology gets adopted. I just had one thought again. I don't know if I have time, but perhaps yeah, I think the kind of like the thing I had in mind was really around, of course, digital divide, but also making sure that particularly when it comes to credit, and we're talking of microcredit, but it's just one example, right? We have all kinds of credit which now can pass through the payments pipeline, digital payments pipeline that has been built. And credit is going to be, if you ask me 10 years, what are we going to see? We're going to see a lot more credit access. And I think unbridled credit access would be dangerous because, typically if we say, okay, people who do not qualify under traditional means of underwriting will now have access to credit itself, sounds great, but then we'll have to wonder about affordability and access and sort of repayment capacity. Those issues will need to be taken much more seriously, I think we will need a lot more focus on that, not because of course there are some of these cases around digital credit having caused a lot of havoc in people's lives, but that needn't be the case, right? And it's not to say that FSPs need to be responsible and that's the end and that's the solution, but rather it needs to be a concerted effort by multiple stakeholders. We could say investors, we could have regulators. They are all shedding light on and just focusing on this question of are we doing affordability right? And I think that's just one thought I had because this is a microfinance panel.
Thank you so much, Deepthi. Pratyush, you will have the last word here, and that will be through a question that we just received. This is to you. You mentioned that the current digital payment process still requires some human intervention from loan officers, and the process needs to be more automated and seamless. Do you see any other avenue other than NASH payments as an alternative to allow customers to pay digitally?
Yeah, definitely. So I'll tell you exactly. So Nash is something we tried, okay, but Nash has a challenge that the bounce charges, etc., are too high for a microfinance customer to pay because they are as equal as their EMI amount or almost equal, okay. And now with the new payment systems, what we have to answer your question is like UPI autopay. So UPI autopay, we are live with UPI autopay, and many microfinance companies, 3 of them are already gone live on that. UPI autopay is similar to Nash. It just happens over UPI, and there is no bounce charge, and it's extremely transparent as well. In Nash, maybe I don't know if you get a reminder, etc., but in UPI you get complete reminders and visibility and access to your transactions which are happening on auto pay mode. So every month it gets deducted, or every twice in a month it gets deducted. That is one. Second kind of unassisted solutions is UPI link, where you can send someone a link and he can click on the link and make a payment. So that's also doesn't require any assistance or training, etc. I think these two solutions which are live, and third also we're working on various other solutions which can help in an auto pay journey, like customers being reminded on the applications itself, and then they can simply pay there. So these are the 3 methods, I think, broadly. Yeah.
Okay, thank you so much. It was a great panel. I loved hearing your thoughts, and I hope the audience enjoyed this as much as I did. I will hand over the panel back to Sa-Dhan, and if you can take it forward.
Thank you once again, and once again, Mr. P. Satish, requesting you to please wrap up.
Yeah, thank you for a very well moderated and panel from which we had brought out very relevant points for technology for clients and not just for the institutions. Firstly, I would like to thank our moderator Saloni Shukla for putting the most relevant questions and bringing in the very good responses from our panelists. Then, of course, from the technology providers side broadly, Sonali Mehta Rao, I would like to thank her from Awaz Day. I would like to thank her for her presentation just before the session as to what exactly Awaz Day has been doing with regard to digital transformation. Then Pratyush Halan, CEO of FinPay, another technology provider. Then, of course, we have from a broader perspective from Dwara, Deepthi George, as ever, brought in very incisive comments about the strategies which the sector can adopt. Then, of course, Prerna from the broader UN family regarding the digital payments and better than cash alliance. And of course, she was again previously with the IFC and other part of the World Bank Group. Then, of course, last but not the least, but I would say the institutionally young practitioner, Vivek Tiwari, and today it happens to be the 5th anniversary of Satya Micro Capital. I congratulate Vivek and his team at Satya for quickly going through the first 5 years with a good speed and good progress. And when any new microfinance entrepreneurs come forward, I always tell them that go and learn from Vivek Tiwari. So we're glad to have him also here. So I thank all of you for your contribution to this very meaningful discussion and session. Thank you, one and all.
Thank you.
Well, thank you, everyone. And with that, we are now going to proceed our final session, which is session 7 on how MFIs can help vaccinate millions, exploring the power of public-private partnerships and MFI's role in expediting COVID-19 immunization efforts in vulnerable communities. Now, there's a tremendous opportunity to leverage the core assets and competencies of MFIs and the backbone for social mobilization, last mile distribution network, and existing trusted relationships in communities to support the critical nationwide immunization efforts on the road to the post-COVID-19 recovery in India. Now, we have as our moderator for the session, Ms. Annie Wong, who is Director, Opportunity International Australia. And as our speakers to share with us their insights, Mr. John Alex, ED and CEO of Equitas Holdings Limited, Ms. Sandhya Suresh, Chief Manager at ESAF Small Finance Bank, and Dr. DSK Rao, who is a sector expert. And these panelists will be, in fact, throwing some light on the topic. We are going to start this session as soon as all of our panelists join us. I see they're there. Mr. John Alex, can I request you to please turn on your video?
John Alex is there. Dr. DSK Rao is there.
And Ms. Sandhya Suresh and Ms. Annie Wong, is she here?
I think she will be joining shortly.
That's right.
Yeah.
Okay, so we can just give it a few minutes, and as soon as she joins us, we would like to begin this session.
Good afternoon, everybody. Samriti, I think she'll be joining at 1:45. That's our scheduled time.
That's right.
Isn't that
That's
so?
right.
Yeah.
Yeah. So let's give it another 10 minutes, and I'm going to request the audiences to stay with us, stay tuned, and in the next 10 minutes, we are going to begin with our next session. We are here with you doing the Sa-Dhan National Conference 2021. It's day 2. It's a virtual event, and this is going to be our last session of the day. And we'll request you to stay with us and put in your questions in the question and answer box that you may be able to see at the bottom of your screen. And I'm sure if our moderator has the time during the session, these questions can be taken up. Please stay with us.
Hi, can everybody hear me?
Yeah.
Great. Let me try and see if the slides work.
Actually,
Good afternoon, Annie.
they were keen to start off, right
Check
away.
if Sandhya is in.
Yeah, Sandhya, are you there?
Yeah, is Sandhya, Ms. Sandhya Suresh, could you please turn on your video? Since you're here with us, we can see that you've joined us. I think we could start the session so we get some extra time. Yeah, she's here. So over to you, Annie. Ladies and gentlemen, Annie will be moderating the session for us, and I'll leave it to you now, Ms. Wong, and you can take the session forward from here. Thank you.
Sure. Can you just give me 1 second? Can you see my screen okay?
Yes.
Yeah, and can you change it to slide screen, please? Slideshow.
Oh, yeah, it is. Hang on. Hang on, just 1 second. Okay, is that clear?
Yeah, that's very clear.
Okay,
Should we
great.
start? We are just 1:37.
Yeah, I think we can because we have all the speakers here, and that will just give us some more time. This was just more like a buffer time for tech check. Yeah. Thanks.
Only thing is, participants may be expecting it to start at 1:45.
Okay, but we do have the participants with us.
Yeah, let us wait for it just a couple of minutes and then.
Sure.
As close to 1:45 as possible.
Sure. I'm just going to flip through it to make sure the slides are showing up okay.
Yeah.
Is that fine?
Good.
Okay, and that should be okay.
You will be operating the slides, Annie.
Yeah, so just let me know or pause or say next slide, whatever is easier, and I'll switch to the next one.
Good.
Samriti, I had a quick question for you. How is the physical attendance there?
At yesterday's event?
Yeah.
Oh, we were a house full.
Oh, that's great.
Yes.
Good afternoon, Dr. Satish.
Is this a hybrid event or is this a virtual event today?
Virtual, entirely virtual.
Okay, so only yesterday was hybrid?
Yeah.
Okay. DSK, did you join the earlier session? I saw you in the call. I only listened for a bit and then I left.
I was there.
And we're the last session, right? This is the last session for the day?
Yeah.
Yeah, yes.
Okay. So after this session, does someone from Sa-Dhan want to say something? Is there going to be a transition to closing remarks?
Yes, it is. I'm going to basically, you could hand over the session to me, and I'll request Dr. P. Satish to give a formal vote of thanks, and that's about it.
Okay.
Yeah.
Sure. Do we know how many participants there are?
As of now, I see 33, Annie.
Oh.
It's fluctuating. It's sometimes going up to 60, 70 again, coming down to 40 and all. So most people are joined on the YouTube channel.
Oh, I see.
Well, it is simultaneously being, it's live on YouTube also.
Okay.
Will everybody be comfortable with English? Should we keep Q&A open if Hindi is preferable?
No, the entire conference was in English. There is no problem.
Okay.
Yeah, Sa-Dhan is requesting us to go ahead.
Sure.
Yeah, Annie?
Great. Thank you everybody for attending this last and final plenary session at the Sa-Dhan National Conference. We're really excited to be here with you today. And so without further ado, we'll get started. This session is called How Microfinance Institutions Can Help Vaccinate Millions. So let me begin by first introducing our panelist of speakers for today. And please note that you can save your questions for the Q&A. We'll have enough time to be able to have a good, robust discussion from the audience. So my name is Annie Wang. I work at Opportunity International Australia as the Director of Health and Women's Empowerment Programs in Asia. And I'm a public health expert with experience working in over 15 low and middle income countries, really focusing on improving last mile access to healthcare and essential services. Let me now introduce our three speakers. So Mr. John Alex, who is the Executive Director and CEO of Equitas Holdings. After graduating in agriculture and rural development, Mr. Alex started his career at the Tamil Nadu state government, then joined the Indian Overseas Bank, which is a public sector bank. Alex joined the management team of Equitas in 2008 and established the team for social initiatives with a clear focus to support clients in health, education, skill development, food security, placement for unemployed youth, and provide inclusive models for persons with disability and transgender persons. Alex has visited 25 countries to speak about the Equitas model, including UNO, Vienna, and Johns Hopkins University. Welcome, Alex. Our second speaker is Ms. Sandhya Suresh, who is a development practitioner and the chief manager of the Sustainable Banking Department at ESA Small Finance Bank. Her primary area of work involves social performance management and financial inclusion, where she uses social research as a tool to bring insights on customer centricity, product performance, community research, etc., to help the bank achieve its mission of being a social bank. She's presented case studies on microfinance as a powerful platform for reducing vulnerability of poor families in various global forums, and how social performance can be embedded in the triple bottom line agenda. Welcome, Sandhya. And our third and final speaker is Dr. D.S.K. Rao, who previously led the technical assistance to MFIs in integrating health in financial services through health education, health financing, and linkages to health products and services at the Microcredit Summit campaign and its parent organization, Results Educational Fund. Dr. Rao was responsible for promoting the Community of Practice of Health and Microfinance, or COPAM, for India, which is a platform for health and microfinance players to come together and learn from each other's experience. Dr. Rao has organized several webinars, national and regional meets for members and potential members of COPAM on the subject of integrating health and microfinance. So I hope we can all acknowledge the incredible panel and diverse range of speakers and experiences with us today. And I'm just going to run through a couple slides to recap kind of where we are, how we got to this conversation around why financial institutions are even involved in vaccinations. And then we'll open up to each of the speakers to give a 5-minute presentation around their experiences in the last couple months and the innovations in which MFIs are embarking on to really be able to improve access to life-saving vaccines. So first on the organization that is sponsoring this session and where I work, Opportunity International Australia is a nonprofit founded in 1976 and a global leader in financial inclusion that works alongside microfinance partners in Asia, including India, Indonesia, Bangladesh, Nepal, Pakistan, and the Philippines. And of course, we all know MFIs are largely social businesses that provide access to capital and livelihoods through small business loans for a predominantly low-income female base. And we really do believe that the expertise of the MFIs as backbone for social mobilization, the last mile distribution, existing trusted financial relationships can provide pathways out of poverty through impactful, scalable, and sustainable solutions. We also work closely with our subsidiary in India, Dia Vikas Capital, which was founded in 2008 as a social investor to support the growth of MFIs, particularly in underserved areas, and has a portfolio of 11 MFIs. Serving 5.2 million active borrowers. So this slide just shows our overall theory of change of how we believe that working with finance, but also through education, health, women and girls safety and empowerment enables clients to be able to develop the financial resources, skills and abilities in health to ultimately allow them to develop resilience and opportunity as a pathway out of poverty. So why are we talking about healthcare, and what do we even mean by access to healthcare? So, when we think about this whole entire COVID pandemic experience, people always think about access to care, access to the vaccine, but really access exists along the spectrum. And when we think about patient centricity and our view of healthcare, we need to think about not just the fact that we've invented or are able to manufacture a vaccine, but that the individual has to have the ability to perceive the need, the ability to seek and desire for that care or that vaccine, the ability to reach geographically that camp or that facility and that healthcare worker, the ability to pay, and even more importantly right now, the ability to engage, the ability to understand information from misinformation and myths, the ability to understand why something is important, even if it may be difficult to see because it's a preventative measure. And when we think about access along this spectrum of that patient centricity, this is really where we also see the alignment with MFIs and why we're having this conversation. As mentioned, for health education prevention, linkages to providers, health loans and insurance, these really closely align with MFI's core assets and competencies, and also has a strong alignment in terms of both the mission and the business. So we can see in that if we have healthier clients, that this would help the overall business of the MFI operations and also differentiate the product offerings and build engagement in community. When the COVID second wave hit in 2021, which was a difficult time, I'm sure for everybody in this call and listening right now, Opportunities response to COVID-19 was to really focus on working with our community-based microfinance partners to be able to offer the emergency humanitarian relief, also provide access to last mile primary care services. And number 5, which was the most important, is to think about how we can expedite mass vaccinations to improve immunity, and through largely a PPP model, so a public-private partnership model. And that's what really the focus of today's conversation or today's plenary session is, the 5th piece. And this 5th piece is important because even though earlier this week, India did celebrate 1 billion COVID-19 doses, which is, an extraordinary accomplishment by any measure, and very well received by the global community and of course the local community, we still have a ways to go. So even as of today, only 23% of Indians are fully vaccinated. And as we cautiously approach this period of optimistic recovery, we know that the shape of the economic recovery will still be very much impacted and shaped by the speed and scale of vaccinations. And as with any vaccine rollout in any country, the results have still been uneven and inequitable. So how do we make sure that now that we've caught some of the lower hanging fruit and some of the discrepancies within reaching urban areas, how do we go further? How do we reach those who are in vulnerable communities, those who are marginalized? How do we bring it to the last mile? So I'm going to introduce again Mr. John Alex, who will be taking us through the initiatives that Equitas has undertaken in the last few months in terms of hosting vaccination camps and working closely with state level governments. Alex.
Thank you, Annie, and thank you, Sa-Dhan, for this great opportunity. Good afternoon to you all again. Equitas saw a role here. In the first phase, we started with when people are not able to move, our staff were not able to move because of the strict lockdown conditions. Then we started volunteering. Helping out, joining with the government in hospitals and distributing groceries. Most MFIs are there. Whenever there's a disaster, they are there. Only thing is here, there was a lockdown and it was pretty difficult for us to go into the field. Of course, all of them took the moratorium. So our field could not go, our field staff could not go there. So we wanted to volunteer. We had a huge staff force. And then we approached the government saying we'll be able to help volunteer. That's how it started in the first phase. Then we started distributing groceries. Equitas has distributed groceries for over 2 crores of rupees. And the government recognized the role of Equitas and as a strong player. And when by March, we were almost close to normal, but then the second wave hit us. That's when the vaccines were getting ready, but vaccines were not available, And then the government saw strength in the NGOs. So they invited Tamil Nadu Chief Minister, chaired a meeting where all the Chief Secretary and all were there. And they asked each of us, what would you do? And we were very strongly believed that vaccination is the way forward. The close contact that we have with the clients. Equitas has an ecosystem where we do health camps, we do skill training, we do job fairs for the unemployed youth. So this came as a very strong partnership with the government. But the challenges were, of course, the government had to release vaccine. So in the beginning in March, the first thing that we did was we got all our staff vaccinated using this rapport with the government. So all our staff are vaccinated. And Mr. Vasu, the founder himself, after getting the second dose, he got COVID. But then the effect was very less. So he had this strong conviction that getting a vaccine really protects a person. A person who's not vaccinated is 0% protected. A person who vaccinated is 80%. Then we thought this is going to give great value to our customers. When I say customers, it is the customers and the extended community that we are working. Our staff are day in and day out. And this is a beautiful model where you partner with the government. Earlier on, the government always views microfinance as something, with skepticism. But when you go out and do the social work, they really welcomed us. Now they understand us and they know our strength of the last mile connect. And when we were on the call with them, even during lockdown periods when nobody could go out and meet them, we were in touch with them on the call, calling them, out of sight, out of mind, alone. There's an old Tamil saying that if you don't recall your money, you'll never coming back. So keeping in touch was one thing that we did, giving them all the precautionary measures of COVID. In the first phase itself, we started this. Second phase, again, we started saying this, vaccinations are. Many of the women said, I have comorbidities, I have to speak to my doctor, I cannot have access to a doctor. Those were issues. But when we said, and the other point that they were saying is, I have to go to the hospital, but there's already COVID there. So if the doctor comes out to our place, that'll be great. So this was the point that we got hold on. And when we approached the board said, this is a very good model, let's do it. And then comes Opportunity International with a beautiful model of saying, we will fund it. You know, they raise fund for us. And then that was a beautiful part. Government is ready. There's somebody to fund it. And the medical government and the funding partner and the implementing partner is a MFI like us. So that was a beautiful partnership, and SDG says partnership is one of the key to way forward. And what we did was contact the hospitals, communicate to the customers that tomorrow at 8 o'clock or 9 o'clock, the doctor team will be there for vaccination. And our relationship officer, who is there every month to meet them, they mobilize the people. We provided table chairs. At Equitas, we have been doing this health camp from 2008 onwards. So far, we have screened 65 lakh people in various health ailments. We call it the screening camps, and we have a small budget of 2,000 rupees. We said we'll convert this to a vaccination camp. Same money we use, same model. Our role is to mobilize people, convince the people to come for vaccination, and our staff were standing there and controlling the crowd, giving masks, sanitizers for the people, and a little tea, biscuit, and lunch for the doctor's team. So the doctor's team had just this work to come, vaccinate, and go. The rest of the work was being done by our staff. So this came, and the doctor's team started seeing value in this. Can you move to the next slide? So if you see the numbers, it's a whopping 16,000 camps, and we have so far helped in vaccinating. This is a beautiful collaboration where we were able to vaccinate more than 2 million people. And the amount that we spent was 1.55 crores. And if you see per camp, it was hardly about 900 rupees. I think most of MFI can afford this, 900 rupees to keep in touch with the customer. After all, this is a life-saving effort that we are making. Person who's vaccinated is 80% voting. This strong conviction is very important for us to realize that the client also realizes the benefit and staying strong to the MFI. Next slide. So this is a snapshot of various vaccination camps. Early on, the government was reluctant to allow our banners, but now you see all our banners around, people waiting, our staff in t-shirts. And now we have this canopies of Equitas. So what better branding would you want for an MFI? Put up your banner, put your canopy there. On the third bottom slide, you can see our canopy with a lot of information about deposits, about advances, about loan, toll-free number. And this is a great branding for us also. But it was a two-edged sword with a purpose, the branding with a purpose. Next slide, please. These are different states, Haryana, Chhattisgarh, Gujarat, Punjab. Hatch, an organization again referred by Opportunity International, said we will be happy to do it in Punjab and Haryana, so we partnered with Hatch. Even one of our investors has sent about 10 lakh of rupees saying that we would like to do more vaccination. CDC of London, their staff raised money after seeing this video, this footage. Gujarat, Chhattisgarh. I have to do this. I have a set of, like I said, Equitas has an ecosystem, but we have CSR officers to do health camps. The same CSR officers. At Equitas, we don't double act. This guy, CSR officer, does only skill training, health camps, and job fairs. So it was that much easier for us to roll out the same model for vaccination camp. Gujarat, next slide, please. Then Madhya Pradesh, Rajasthan, Maharashtra. Next. Then came a request from the government saying that there are people who are living in far-flung areas, persons with disability, aged people who could not come even for the camp that were arranged in their vicinity. So then we have to take individual nurses. We found that nurses also jumped onto our relationship officers, our field loan officers' bikes to go and vaccinate. You can see all those blue boxes with vaccine and a nurse. So you'll see people aged and persons with disability also. This gave a lot of satisfaction. The best part was the staff got involved, volunteering. Everybody wanted to do something during COVID, and this was an opportunity for the staff to go out and do. On Saturdays, Sundays, they spare their time to come and volunteer. Next slide. So first versus second, like Annie said, second dose is 52 doses is only 23% to 25% every day. It is increasing, thankfully, but still we have a great way to go. First dose, of course, 50%. The same statistics is revealed here. Covaxin, for obvious reason, did not pick up because it was not approved by WHO. So Covishield picked up. Again, supply was also more for Covishield. Next. One of the key factors is that there's no vaccine, no camps. So we have to keep in constant touch with the government, with the medical team. In most of the states, they have a state vaccination officer, nodal officer. In the district level, there's a vaccination officer, the collectors in charge. So if each of the MFI can contact them, they'll be happy. In fact, if you go and say, I want to help in vaccination, they'll be more than welcome. They'll be happy to welcome you on 18 plus and 45, because as you all know, the early doses were only for 45 plus. Slowly the government opened for 18. But you see, 18 plus is more here in this graph. And male are more than female. Females, one of the things, even I was calling some other people, asking them, why are you not coming for vaccine? They said they have comorbidities, they have some skin rashes, so they need to consult a doctor. The challenge was doctors were not available during COVID because they were more focused on COVID relief. Next slide. Yeah, I think that's it from my side. I appeal to all the MFIs, people who are watching, that if you can, we have a long way to go. If you can really take up this life-saving venture, I'm sure this relationship, the bonding with the customers, Equitas has always thought about, right from 2000, we give 5% of our profit for CSR, and we believe this soft touch is very required, which microfinance is founded on this model of keeping in touch with the customers and helping them. And health is a major pain point that they face. If you see statistics in India, the reason for borrowing or over borrowing is because of health issues. So when we start taking care of them, I'm sure they'll be loyal to their MFIs. Thank you, Annie. Over to you.
Thanks, Alex. And again, what an incredible achievement from Equitas to be able to vaccinate 2 million people. And I believe it was 1 million just in the month of September. So it'll be very exciting to see the results in October and onwards, and really have some more data as well to understand whether or not these camps, we believe they have been successful in being able to reach disadvantaged, marginalized, and remote communities. So second speaker, I'll pass it on to Sandhya, who will go through ESAF's vaccination project called Suraksha and the three-pronged strategy that they've taken. Sandhya?
Thank you, Annie. Thank you for that introduction. And thank you, Sa-Dhan, for having me here and for this wonderful platform. Absolutely delighted. Yeah. As Annie gave a brief introduction, I'll be talking a bit on our COVID response project that we have undertaken. ESAF Small Finance Bank has undertaken with the support from multiple stakeholders. Firstly, ESAF Society, which is a foundation, the ESAF Cooperative, which is the biggest BC of ESAF Small Finance Bank, and also the government, district administration, the health department. So this is a collaborative effort that different stakeholders came together, and we've had this project. It is still ongoing. I'll just give a brief presentation on it. Suraksha 2021 was especially the project on vaccination, though COVID response program had several other components also. Suraksha 21 was initiated with the support that came from Abortion International. Next slide, Annie. To give a quick snapshot, we had invested our CSR fund into the COVID response project, and then the partial support also came from OIA. When we look at the whole approach of the COVID response project, we had taken a threefold approach. The first one was, of course, to give direct benefit to the community, be with the community, both physically be there and also give them psychological support, because many of them had lost their primary breadwinner. So be there with them, and the first thing was to actually identify the families, especially the Sangha members or customers who have had lost their primary breadwinner, or the breadwinner was in the hospital for a very long time. So they were given grocery kits and rations that could last for some months. So we could provide such ration kits to nearly 19,000 families. And then while we were doing that, we understood that the vaccine had also come into the forte, and then there was a lot of reluctance in some of our community members, on even among our customers, to go and get themselves vaccinated, because there was a lot of myths and misnomer that surrounded them. So we thought that while we distribute the grocery kits and all, there is a need to actually give the right information or the awareness to our customers, not only to our customers, but community at large. And it was at the right time that opportunity came, and they had organized a training program, a TOT, wherein we had our master trainers from different parts of our country participating in that program. It was well led by Dr. Rao and his team. And then from there, all these master trainers, they trained the branch team. So it was like took almost 2 or 3 months to do that. And we are still doing that. We're still doing that. And the branch team identified 20 community leaders to whom they imparted this knowledge. It was like a one-day full training program. And this 25 women, they went to nearly 10 community members or families, neighborhood families. And that's how this whole momentum of community level awareness on vaccination and COVID care is going on right now. So, and the second approach was to build the institutions or strengthen the institutions in the community. For example, rural hospitals, which could accommodate more number of COVID patients. So that, because we realized that once somebody, if they are in the rural villages, if they have to go to a town or a city, it would actually take a lot of time, and it was quite expensive for them. So we've understood that why not to build or equip the rural hospitals so that more number of COVID patients could be adopted and accommodated there. So with the support of, we supported CII and to establish nearly a 500 bedded COVID first care center. Then a 50-bedded COVID care ward was established in one of the remote centers in Kerala. Then a rural hospital in Palakkad was uplifted, so that they could offer the medical facility. With this, we did in partnership with the local government. Then few private hospitals were given ventilator facilities and disinfected chambers and those kind of facilities were erected. Piped oxygen systems were given, oxygen concentrators, PPE kits, sanitizers, face shields, masks, pedal sanitizers. It was given to the hospitals. So that was the second approach that we have taken to build the rural hospitals so that more and more COVID patients could be saved. Second, next slide, please. Yeah. So this is the key aspect, the third approach, which was to enable vaccination I think we have reached around 265,000 people till date, and the effort is still going on. So this was an effort, I think, which we could undertake with the help of several stakeholders, including the district administration, the health department, the local self-government, the volunteer groups. For example, there was a volunteer group of doctors in Wayanad district in Kerala, because the terrain is really difficult. They were finding it difficult to go to the households of this tribal population. So because of the vehicle support that we had, we could take their help and give the support. So directly, we have done some 900 camps that benefited 2.15 lakh people. And then there was a vehicle support, because when we approached the district administration in Wayanad, because Wayanad is one of the highly populated tribal belt in Kerala, and they came up with a project called Gotra Suraksha, and they had called NGOs or MFIs or local level CBOs to come and help them out, and we offered our help to extend the vaccination support to the tribal population. So initially, we made the payment for all the vehicles that were utilized to bring the tribal people from different colonies either to the vaccination center, or the team directly went to their houses to give the vaccination. So all the vehicle support for 2 to 3 months that was borne by ESAF. And later, when the support came from opportunity, we could buy two vehicles, a 19-seater vehicle and a smaller vehicle, which actually was deployed in this area to take the medical team to the houses of these people who were reluctant to come to the camps. Yeah, so as I've given a little bit of a brief here, so I won't get into reading that. Yes, so in the first phase, we could cover nearly 35,000 tribal population. And in the second phase, which is still going on, in a week's time, we could reach nearly 7,000 tribal population. With the support of the mobile vaccination unit that opportunity actually funded. Yes. Next slide, Annie. Yeah, so this is some of the photographs of the grocery kits and initial help that we gave to different Sangha members or our customers. You can see that in the background that they're coming from a very, very poor, situation. And in the photographs that are placed below, there are some of the supports that we have given in the hospitals in Kerala. On the right, you can see the 500 bedded first care COVID care center also, for which ESAF Bank had provided the CSR funds. Next, Annie. Yes, so this photograph talks about the Gotra Suraksha project, or the vaccination, special vaccination drive for the tribal population. So the district collector of Wayanad, she herself flagged off the Suraksha vehicle, when during the start of the Gotra Suraksha second phase of the program. And then the second photograph, you can see that the ISAF team, along with the volunteer group of doctors and health center staff, they're marching towards a vaccination camp in a tribal colony. So this is not like, this is ISAF's project, or this is like, some youth for doctors project. No, it was like everyone coming together, and that there was only one mission, and that was to go and vaccinate as many tribal people in the colonies that was possible. And then there's a medical, before they could do the vaccination, many people were reluctant, and then the doctors had to actually do a routine checkup, so that they could know that, okay, these people are safe and they have come here to actually treat us, and not only just give a shot or something like that. So as you can see in the picture down, the medical team, along with the ISAF team, they are really climbing the hills to reach the houses. And yeah, and people who couldn't come, or who were reluctant to come, who were having some sort of ailment and all, they're given the vaccine right at their doorstep. Next, Annie. So so this is some of the lessons that probably we have learned when we actually went on to do the vaccination drive. I think that MFIs and SFPs can actually leverage in a big way on the network of brand spread and the doorstep service platform, because we are already having that. Everyone is having that, through our long years of service to the community, so that we can connect to the last mile community member who is probably on the edge on the receiving any support that's coming. Because of our strong community presence, it is easier to build rapport with the local stakeholders, including the volunteer groups, the youth groups, the panchayats, the primary health centers, or Anganwadis, because And especially our credit officers are able to do that connect very well. So because of the community presence, it's much more easier to actually do this work. It helps build stronger community relationship, which enforces the dictum that we are more than just loan providers. We are with you through thick and thin, and you can actually bank on us. So it aligns very well with our vision and mission also. And of course, networking with government agencies has helped a lot in strengthening their rapport and to establish very long-term relationship and associations also. And we have been providing opportunities for our staff through our employee volunteer program. So for all these programs, our staff has dedicated a few hours from their routine work to come and volunteer for this program. So I think through this we can give them a thinking on an experience for differentiated banking also. And post-disaster, we know that risk reduction support and in the form of emergency loans and moratoriums are very much there for the community, and all the MFIs are doing that. But some intangibles like the one which we spoke can really go far off. Next, Annie. These are some of the, I won't get into this, these are some of the testimonies of our customers, and also some of them are general public, who actually got the benefit in the big. So that's some of the testimonies. Yeah.
Thanks, Sandhya. Thank you for all the pictures and anecdotes as well. It's been really a pleasure to work with ESAP on this and really see the commitment to serving marginalized and tribal communities. So our third and final speaker on the panel is Dr. DSK Rao. DSK?
Thank you, Annie. Thank you. At the outset, I would like to thank Sa-Dhan and Opportunity International for giving me this opportunity to share an important work we did of developing an education module on COVID-19. And before going into the module part, I would like to give a little background to the institutions where I worked formerly. Results Educational Fund, which is actually the parent of Microcredit Summit campaign, where I worked for a long time, and Grameen Foundation. These two US-based nonprofits worked very extensively in India, promoting health on the platform of microfinance. And they partnered with some very, very major players, mega players like Bandhan Bank, Equitas, ESAF, Cashpro, SKDRTB, Mavim, a government SHG program of Maharashtra. And we partnered with these institutions for promoting health. And health education, linkages to health services, and health financing. These are the three major components of the health promotional work, which a MFI can and have been, some of these MFI have been doing it. And out of all these things, we find that health education is the bedrock of health promotion work. And we also learned that health education, which is the bedrock, if properly designed and delivered, will not only provide awareness, but also help to change the health behavior and health practices. Next, Annie. COVID-19 is a new disease. When it struck viciously about 2 years back, very little was known about this disease, even to medical personnel, leave alone the general public. Leave alone the general public, and you can imagine the condition of the rural poor. There was a lot of media coverage, TV, newspapers, lot of media coverage was there, bombarding with information about COVID. But along with that media coverage, there was also a lot of misinformation and myths were floating around. People were, even I myself was so confused and scared. People were really worried about this disease. There was need for providing authentic information in a simple format. What is important is in a simple, understandable format, there was need to provide authentic information. And we people knew that MFIs in our country have great outreach. I think it's about 60 million clients now, nearly coming to translating into about 300 million population. They have great outreach and are ideally placed to spread the message on COVID to millions of their clients in a short period of time, not taking too long, in a short period of time, in a cost-effective manner. Only MFIs can do it. So that realization was already there. So that encouraged me and my former colleagues, Dr. Soumitra Datta and Alok Chakrabarti. We were all together for a long time. And we decided to develop an education module on COVID-19 and share it with the MFIs in the country. Next. Annie, next. The module we developed can be divided into 4 sessions. And the first session is the journey so far. How COVID spreads and common signs and symptoms and preventive measures. Most of the points in this session are such that credit group women might have already heard. But along with what they heard, they also heard a lot of myths, a lot of misinformation, a lot of rumors. So we have tried to present authentic information in a very simple format on these aspects, like how COVID spreads and what are the common signs and not so common signs and symptoms and how to prevent it. The whole thing was presented in a simple format in the first session. And there is also a question answer session in this session, so that more involvement of the participants is there in the training programs. In the second session, we talked about how to fight COVID. So here in this session, importance of testing for early detection, what is home care and when to go for home care, and what are the danger signs. The moment you see these danger signs, immediately a patient should be hospitalized. And what type of mask? There are a lot of doubts about masks. N95, surgical mask, cotton mask, so many masks are going around. And which mask is better? Which mask serves what purpose? How to use the mask? How to properly wear a mask? All these things have been presented in this session. And when to go for double masking. Sometimes when you are going in a crowded place, it helps to wear double mask. So every aspect regarding mask are discussed in this second session. In the third session, we clarify several myths. We discuss the impact of COVID on the lives and livelihoods of poor through a case study of 2 migrant laborers who were severely affected by the COVID, and how credit group women should come forward to help COVID affected families in their community. Otherwise, there is so much of stigma on COVID that if there is a patient in a house, nobody comes forward to help them because of fear of contacting COVID. But in this session, we try to encourage the credit group women to come forward and help those families which are affected with COVID. In the last session, we discuss about vaccines. And let us defeat it, get vaccinated. The title of the session itself says that vaccines are perhaps the most important tool to defeat COVID. So that a lot of importance is given here. In this session, again, we try to clarify so many myths about vaccines, the fear of vaccines. Of course, now things have improved. We have crossed the 1 billion mark. People are coming forward, but still we find that there are a lot of doubts and hesitation about whether pregnant women can be vaccinated or not, whether lactating women can be vaccinated or not. In this session, we try to bring clarity to some of these doubts, some of these points which people have. Annie, next one. So when we do the training programs, each of these sessions, I described in the previous, can I go back to the previous session, Annie? Yeah, each of these 4 sessions takes about 30 minutes and they are made highly participatory. We have some quizzes and question answers and group discussions. So they are made highly participatory and it takes about 30 minutes to facilitate each of these sessions. Lessons could be delivered during the credit group meetings when if and when the groups are meeting. That platform can be utilized for another 20-30 minutes to deliver the lesson, or a separate meeting could be convened for this to suit at the time suitable for the credit group women. Sessions are scripted in an extremely simple language. Facilitators, even with school education, school educated girls, young girls and boys can facilitate these lessons with a little bit of training. Next session, next slide. So from this, we conducted actually 5 training of trainers, and these trainings were conducted, two TOTs were conducted for Indian MFIs, 2 TOTs for Nepal MFIs, and 1 for Indonesia. And we covered 3 countries, and there were 135 participants. Of course, most of them were trainers in different MFIs, and 75 MFIs participated, and together the 75 MFIs have an outreach of 12 million clients. And what are the learnings we had from these TOTs? Basically, participants liked the simplicity of the module and the way it was presented. Pictures and anecdotes, stories in the module relating to microfinance women were very much appreciated by the participants. Participants responded well to the content of domestic violence. You know, COVID-19, because of the COVID, because of the frustration, joblessness has led to a lot of violence against women. So participants responded well to the content of domestic violence. In one of the sessions, we have a case study, we have a story which is conveyed through a story, that they liked it very much because they could identify themselves with the character in the story. Along with the module of 4 sessions, we have also prepared key messages for each session, which could be text in vernacular language to clients. And we have also prepared transcripts for each session, which any MFI could use it and develop some very simple, cost-effective videos using a smartphone. They can develop simple videos and circulate them to their clients. The transcript for each of these sessions is provided so that making a video becomes much easier. MFIs use the training of trainers, whoever participated, the 75 MFIs. Many of them used our material in different forms. Some of the big MFIs who have got regular training departments and trainers, they have already trained their field staff, and the field staff have started delivering the lessons to the clients. Some other MFIs use the materials as a starting point, but eventually created their own brochures, their own videos, etc. Question answer sessions in these TOTs were very lively, with a lot of questions seeking clarification about masks, vaccines, myths and misinformation about COVID in general, and vaccines in particular. A lot of questions were there about vaccines, the doubts and apprehensions these people have. Next, please. Annie, 1 second, please. Go back. Yeah. Participants were very comfortable with virtual training, though we even in some of the training programs, we had about 36 participants, but even that a large number did not affect in any way the quality of the training program. Next, please. So what we are going to do next, we will be launching a follow-up survey in December to capture how COVID modules were being implemented by those who participate in our TOTs, and develop an impact evaluation summary. And at that time, we will also assess other health-related needs, training needs for these microfinance institutions. So those MFIs who will be interested to learn more about COVID-19, if they are interested to educate their clientele about COVID-19, and if they are interested to have any training from us, they may contact me at dskrao@yahoo.com. We will be happy to share our training material. And at the outset, I would like to thank Annie Wang of Opportunity International for funding our project of developing this education module and conducting the TOTs. Thank you very much.
Great, thank you, DSK. And having attended all of the TOTs, I can say that just the fact that all of the MFIs are so well respected by their clients and so trusted in a time when information can be confusing is really a blessing and also a privilege to be in that position of trust and to know and to be able to put that towards kind of public health use and to really focus on illiterate clients or clients with limited literacy, because there's a lot of content, but to make sense of it in a simple way is something that all of the participants greatly appreciated by you and Dr. Sumitra and Alok. So this is it. This is the end of our panel. I know we're running a minute over. Let me know if there are any other questions in the Q&A. Otherwise, thank you again for attending this session today. I hope that everybody came off, or everybody who's listening right now is a bit more inspired at the role that MFIs can play at the intersection of financial inclusion and health, and particularly in this moment in history at the intersection of providing vaccinations and also providing a valuable financial service to clients.
Well, yes, thank you, Ms. Annie Wong. It was, in fact, an inspiring and a thought-provoking session. We'd like to thank Mr. Rao, Ms. Wong for a flawless moderation of the session, and of course to Mr. John, Alex, who was also a part of the session, and Ms. Sandhya Suresh. And with that, ladies and gentlemen, we have almost come to an end of our two-day Sa-Dhan National Conference 2021. For a formal vote of thanks and closing remarks, once again requesting Dr. P. Satish, Executive Director of Sa-Dhan, to please talk to all of us now.
Samruddhi, before formal closing and vote of thanks, I have to thank the panelists of this session. No?
Right.
Yeah. So firstly, I would like to... has happened because of the efforts of Dr. D.S.K. Rao, my senior in NABARD and senior always guiding in this sector. So thanks, Dr. Rao, for making this session happen, and also immediate positive response from Annie Wang of Opportunity International Australia with their Indian partners, Diya Vikas Capital. I thank them, and I also thank John Alex of Equitas, a good old friend, and Sandhya Suresh of ISAF for being on the panel and sharing your experiences. And of course, Dr. Rao knows that many other MFIs are also trying to do a lot of work, and we hope that this session will motivate many more MFIs to carry on the work in the vaccination part for COVID-19. On a broader plane, I would say that we would continue to hope for a continued support from Opportunity International Australia for carrying on the activities of the COFAM vertical in Sa-Dhan, which the seed of which has been sown by Dr. D.S.K. Rao. And for this session, again, I would specifically thank the support which we received from Opportunity International Australia. Thank you.
Nice.
So with this, we come to the close of the two-day physical and virtual conference of Sa-Dhan. While before closing and before thanking, I would just like to recall what all we have seen in the last 2 days as far as the conference is concerned. We are thankful that our conference has been graced by eminent guests like Mr. Rajeshwar Rao, Deputy Governor, Reserve Bank of India, Mr. S. Raman, Chairman and Managing Director, SIDBI. Dr. Chintala, Chairman, NABARD, was unable to join at the last moment because of certain emergency. Then, of course, our co-chair, Mr. H.P. Singh, who is CMD of Satin Trade Care Network. Yesterday's inaugural function, it started off with a welcome and introduction by Mr. H.P. Singh, co-chair of Sa-Dhan, who described the sector and Sa-Dhan's work and the focus point as far as the conference is concerned. And in his keynote address, Chairman SIDBI, Mr. Raman, stressed on the MFIs and their role and contribution in financing the livelihoods of the people. He also stressed on the need to look at the futuristic role of MFIs in the light of the new regulations coming in. Probably also stressed that there has to be a enhanced role for Sa-Dhan as a self-regulatory organization. And as a part of the inaugural function, we had the opportunity to release the Bharat Microfinance Report 2021, which presents the overall picture of the sector, not only the microfinance institutions, but the self-help groups, banks and SFBs, and a small part on micro insurance and micro pensions. And we are thankful to NABARD's Department of Economic Analysis and Research for their continued support for the research as well as analysis, as well as the publication of the Bharat Microfinance Report for the last decade or so. And we would also like to recall a couple of points which Deputy Governor Mr. Rajeshwar Rao made in his inaugural address. He lauded the microfinance sector's tremendous progress in the last 2.5 decades. But at the same time, he cautioned that the roots and origins of microfinance should not be forgotten and sacrificed at the altar of the bottom line growth. Deputy Governor referred to the revised framework which is being proposed, which will be applicable to all the lenders, not just pure play MFIs. So their issues regarding loan amounts, installments, they all will be linked to household income, and even interest rate without any ceiling. The pricing norms will be based on the cost of funds, operational costs, and risk cost of the institutions. While stressing on the self-sufficiency and financial sustainability of the institution, we should not stress on the lessening of social and welfare goals of microfinance in the pursuit of profitability. The conference had 7 sessions, of which 3 were largely physical, with some panelists joining in virtually, and 4 were virtual sessions completely, which are held on the second day. And in the first session, we dealt with the resurrection of the microfinance industry, the impact of COVID-19, and the outcome of this pandemic on the clients as well as the institutions, and how the sector has emerged resilient even as the pandemic has progressed. And in session 2, we discussed about the sustainable development goals in tune with the inclusive financial goals, and also microfinance sector to look beyond just livelihood financing and promote areas like finance to clean energy, climate change mitigation, etc. And in session 3, we looked at product diversification for a meaningful financial inclusion, which also spoke about the sector to graduate from the single JLG product, and also the emerging regulation indeed provide for such a diversification. And in the second day, we started off with a session 4 on the liquidity, stress, trials and tribulations, and how the pandemic has led to unprecedented financial stress, and how the disruption in livelihood, despite that, the people at the bottom of the pyramid received support from the MFI sector, which in turn got policy support from the government and Reserve Bank, and financial support from the DFIs like NABARD, SIDBI, and the broader banking sector. And in session 5, we looked at a broader financial inclusion agenda, including gender and collectives, and the role for institutions like farmers, producers, organizations, and women-led cooperatives. And the stress in this session was that women have to be empowered for their own institutions, and there should not be any paternalistic view from the institutions which are serving them. And session 3 was on technology for clients, how fintech in microfinance is emerging as the single biggest disruptor. And it looked at the state of technology in the MFIs, as well as the familiarity and adoption of clientele to use this technology. And in the last session, we looked at microfinance institutions in the area of vaccinating millions, and how an institution which is basically a financial institution has taken the lead for leveraging their outreach and assets to take health services to the poor. And this serves as a good example as to how we can use our network to bring good health to our clientele. This is a session which has been facilitated by Opportunity International Australia. And in this entire program, we had 7 moderators and 31 panelists. Along with that, we had 3 lead presentations on various topics from our knowledge partner, Prime M2I Consulting. And we also had two presentations on the role of technology in facilitating insurance and also in facilitating financial inclusion. And yesterday, as a part of our program, we had Sa-Dhan and Water.org awards, where 7 institutions have received awards for doing good work in financing water and sanitation related activities. 3 of them were MFIs, 2 SHPIs, and 1 each from the banks and the funders. And lastly, I would be failing in my duties if I don't thank our conference partners who have made possible by their financial and moral support for this conference to go ahead. Firstly, I would like to thank our conference partners, NABARD and SIDBI, which have supported the conference in a big way, financially and morally, along with their chairman, giving all our support. Then our principal sponsor, Care Health Insurance, I thank them for their generous support for the conference. And our associate sponsors, Delight, SBI General Insurance, Satya Micro Capital, Utkarsh Small Finance Bank, Jana Small Finance Bank, Bandhan Bank, Opportunity International Australia, Water.org, Bima Plan, Awaaz De, M-Sure, our knowledge partner, Prime M2I Consulting, the neo banking partner, FinPay, and our online reputation partner, Eminence. I would also like to take this opportunity to thank our own Sa-Dhan team who has made this conference happen, led by our colleague Chandan Kumar, ably assisted and supported by Sandeep Rewari, as also Balkishan. Then Bharat Microfinance report mainly has been the work of Mr. Ardhendu Nandi, supported ably by Shamasri Nandan and Sunny Koshi. And our entire Sa-Dhan team was behind our conference team and BMR team, which included Mr. Somesh Dayal, Saibal Paul, Dolly, who looked after the conference and the accounts and the finance related aspects. Then Sangeeta, Sunita, who looked after the Water.org and Sa-Dhan awards. Rituparna, who looked after the communication and the media part. So I thank all of them, and also our regional team, the 4 regional coordinators, Karthik, Ambrish, Sauvik and Mehtab, who ensured that participation from the member institutions and people at the grassroots level happened. And last but not least, I would also like to thank Hotel Le Méridien, who hosted the physical part, and Sutra, who was our conference technology hosting partner, and Elegant Printers, who printed both the Bharat Microfinance report as well as our program booklet. Thank you one and all, and we hope that next year we can have a more successful and fully physical 2-day conference.
Congratulations, Satish.
Well, thank you, everyone. With that, we come to a close of the National Conference Sa-Dhan 2021. We wish you a pleasant evening.
Last but not the least, I will have to thank our host, Samruddhi, who did it physically yesterday and virtually today.
Thank you, sir. Thanks, Sa-Dhan. Thank you, everyone. And with that, we'll now close. We wish you a pleasant evening. Thank you.
Thank you.